they learned from the September attacks was that Saudi Arabia will do everything it can to keep the market stable.
Stuart, John and I will be knee-deep into the politics of the nation to March 3rd and Super Tuesday. And then comes Super Thursday, where John and I jet off to Vienna to the 178th extraordinary meeting of the OPEC conference. What will that meeting be like after what we've observed since Friday?
That's a really good question. I mean, I think that largely what we're expecting from the Russians is not much change in terms of their attitude. They clearly would like to pump more, and they clearly are pumping more. From the Saudis, I think their big goal at that meeting is going to be to reassure the market, as they did, as John pointed out, after the Abqaiq attacks in September. We're here to help. You can rely on us. We are the world's reliable supplier. They've got to reinforce that. They've got to keep reinforcing that message because, as you pointed out, look, this is a jumpy market, and if they start losing confidence in Saudi and its allies to keep supplying that market, we should be going a lot higher than we are.
But can Saudi Arabia be focused on the March 5th meeting in Vienna that John and I are attending because they have such serious, immediate issues in defending the kingdom?
Yes, no, that's quite right. I mean, the short answer is yes, they will have to do that. And it's not just because of oil. Of course, now they've got Aramco trading as well. And, we had that flurry of stories at the beginning of the week where Aramco clearly was thinking on what was happening over the weekend. So they've got this additional worry that they've got a very visible asset in place now that, largely reflects what's going on in terms of sentiment in the oil market.
Final question from me, Stuart. Just looking at how the South Side has responded to this over the last couple of days. Citigroup boosting its 2020 Brent target to $64 a barrel from 59. Morgan Stanley in the last 24 hours lifting its 2020 Brent forecast by $5 to $65 a barrel from 60. Both of those targets are below where crude is right now, Stuart. So we're market to market just a little bit because of the renewed tension. But still, many of these houses on Wall Street in the City of London looking for crude to end the year lower than where it is now. What should we make of that?
What I would say is that if I was an analyst trying to make a price prediction on the price of Brent over this year, I'd be very cautious too, and I would probably nudge it forward or upwards or downwards every couple of months as well. It's a pretty bold call if you're an oil analyst to come out and say, look, I think that the chances of a conflict in the Middle East are reasonably high now, or certainly much higher than they were, and if that unfolds the way I expect it, well, then you imagine what that does to shipping supply lines through that region, and imagine the impact that has on the crude market. That's not an unreasonable position to take, but it's a hell of a thing to come out with a big analyst note saying that at the beginning of the year. There's not a lot of upside there for you.
Stuart Wallace, always great to get your important insight and perspective on the situation in the commodity market and the Middle East. Our news director out of London, Bloomberg, Stuart Wallace there. Tom, isn't it interesting that we get these raised forecasts, these raised targets from the South Side, and yet Citigroup, 3Q, their third quarter estimate for 2020, $63. It was $55. They've adjusted, but considering where we are right now, they're looking for crude to be lower by the end of 3Q than where it is at the moment.
And again, I was making jokes there, folks. I don't. It's under discussion whether John and I are going to go to Vienna, but all of a sudden, the oil community, I don't mean just OPEC, as Stuart mentioned, Russia as well, the entire oil community has to adapt to the news flow. Folks, on the Bloomberg terminal is a great pie chart. I'm not big on pie charts, but the OPEC cartel pie chart really shows the influence of Iran and Iraq. We underestimate how their oil production has come back, even with the sanctions as well. Futures up 2, Dow futures up 16. Again, yen weaker. That's mostly what I'm watching, a 108.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a Bloom.
Why book with Sunhat Villas? Take over 200 sea view spots, over 350 places at the heart of the destination. Over 400 villas just a short walk to the beach, and even more countryside retreats. Add in 1 to 10 bedroom options, 19 years of experience, and 5-star reviews. And you'll find countless reasons to make Sunhat your number one. Search Sunhat Villas, ABTA protected.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Boredom. Fitness enemy number one. So don't just run. 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 Mix it up. Skip. Run. Skip. Run. Give yourself a lift. Mix it up. Lift. Mix it up. Run. Lift. Splash. Skip. Lift. Run. It's crunch time. Skip. Mix it up. Run. Mix it up. Add a boxing class. Skip. Run. Splash. Skip. Run. Mix it up at Virgin Active and get stronger, fitter, faster. Join now for 12 months and pay nothing in January. T's and C's apply. Run. Mix it up. Skip. Mix it. Run. Mix it.
I spy with my little eye something beginning with P.
People.
No, parrot.
I'll have to remember my binoculars next time.
Although you might not be able to see it, your small actions can have a real impact with Shell. Every time you fill up and use Shell Go Plus, you'll be protecting and replanting forests around the world. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg Radio. Here is your Tuesday morning price action. Equity futures with a little bit of a lift in the last couple of minutes, up to, call it 3 points on the S&P 500, positive almost 0.1%, though well off session highs. In the bond market, just a little bit of a bid, a mild one. Yields coming in a single basis point through the curve, 2s out to 30s. Your 10-year yield in and around 180. In foreign exchange, you're seeing as follows: a stronger dollar against pretty much all of G10. The underperformance coming from the Aussie dollar, the outperformance coming from the Japanese yen. And in the commodity market, the crude rally fades. Crude down 1 percentage point on Brent to $68 and around about 24 cents. WTI down 0.8% to $62.74, Tom.
Very interesting. Let's dive into it. 5 things you need to know, John, to start your day. Brought to you by IBKR, the professionals' gateway to the world's markets. Their clients enjoy lowest cost access to stocks, options, futures, Forex, and fixed income from a single integrated account. Learn more at ibkr.com. John, I want to get the news flow, particularly for those waking up in the United States here on Iran, Iraq. What sticks out to you? To me, there's just so much news flow right now.
I would say the music is the same, but Iran has turned up the volume. And what I mean by that, there's no real fresh content this morning to hang your hat on. There's just heightened rhetoric. So what we're hearing from Iran and the head of Iran's National Security Council is that the country is assessing 13 scenarios to respond to the killing of General Soleimani. They're saying that even the weakest of those options would be a historic nightmare for the United States. But ultimately, Tom, we're faced with the same situation that we've been faced with since Thursday night going into Friday. How will Iran respond? How will they appease the discontent that we see quite clearly on the streets of Tehran and beyond across the country in Iran, and minimize the prospect of snowballing escalation in the region? And will they, perhaps more importantly, will they cross another one of the president's red lines? And what will that mean for what happens next?
So there maybe is Tehran and then into Baghdad. I would focus on one small sentence and a buried paragraph from Bloomberg News of 2,200 Marines and a helicopter unit moving from the Mediterranean round to the Persian Gulf. There's different troop movements, John, making headlines, but I'd really focus on small items like that. Get your attention. John, I speak with Chairman Greenspan here later today. Alan Blinder out with the Wall Street Journal op-ed, but I thought Adam Posen was really quite good at how all of these central banks are redefining what to say.
And a big problem for them, I think. Look, we touched on it with Adam Posen just a little bit, Tom. Investors have been so conditioned that if anything goes wrong, whether it's Middle East geopolitical tensions, whether it's softening manufacturing data, or for that matter, whether it has nothing to do with the economic fundamentals whatsoever and everything to do with just the price action, that the Federal Reserve will step in and the Federal Reserve will have our back. I think that's really, really interesting, that is still the number one driver of price action at the moment, and was perhaps the number one driver for much of 2020 as well.
This is so important, folks. And John, I'm going to go back to Charles Evans in November at the Council on Foreign Relations. Is one thing clearly wanting to see central banks find that bound above 2% to discover the targets and the emotion and the belief and the theory that supposedly assists in reflating. But as Dr. Posen said, there's scant evidence they can actually get away with that process.
Getting the inflation target is one thing. What do they do next? Quite another. Tom, we're talking about the prospect of rate cuts again this year. I'm catching up with Rabobank a little bit later today. They think there's a possibility, and this is a real outlier call. This is not my base case. I'm not sure it's anyone's, maybe apart from Rabobank's, but they think that the Fed could possibly cut rates all the way to zero by the end of this year. I'm really looking forward to that conversation. It's coming up a little bit later at around about 9:40 Eastern time, if you managed to catch that on Bloomberg TV, and maybe we can bring you some highlights on Bloomberg Radio a little bit later today.
John Farrow, it's a tradition that I speak with, former Fed officials and even some of the senior people before the interview just to get their thoughts and feeling. And I must admit, I'm really looking forward to this conversation with Alan Greenspan. He is hugely active in his 90s. And John, he brought up something that you've brought up, which is this absolute mystery of demographic change and demographic aging in all societies, and how it folds into productivity and into the animal spirit that leads to business investment. We're just getting older out there, maybe led by the United Kingdom.
So, Tom, if that's the case, what is the Fed's role? What is the role of monetary policy in that kind of environment? And to go back to your discussion about the inflation rate, how do they get inflation in and around target if the biggest problem is something that they can't solve? Japan used to come up as a conversation again and again, especially a couple of years ago when the BOJ was much more active with its balance sheet. And I always used to say that the BOJ can't print babies. If they've got a demographics problem, what can the Bank of Japan do about it? The answer to that is not a whole lot, yet still, here we are trying to address demographic and structural issues with a balance sheet, with interest rates, and I'm not sure how they go about doing that.
Yeah, and to what Chairman Greenspan will speak about today, the immediacy of this, and we saw this with Eurasia Group yesterday, John, the idea of 2020 as a tipping point. That's how Dr. Bremer titled his 50-page document. I mean, do you have a sense of a tipping tipping point out there right now?
I'm struggling to get my hands around the last couple of weeks, never mind the next couple of months, never mind the next 12 months. Tom, let's go back to the geopolitics and talk about Iraq. The absolute confusion on Twitter yesterday afternoon about the future of US troops in the country. Growing confusion in the last 24 hours after reports of a letter telling officials in Baghdad that forces were repositioning in advance of a departure. That was within the letter itself. Then US officials coming out subsequently in the hours after saying that the letter was a draft and should never have been sent. Absolute confusion over the last 24 hours of what will come next in Iraq, and I imagine there's going to be more confusion in the coming days and weeks.
Certainly, and Greg Vallier, I believe, scheduled to be with us, making very clear confusion is being polite, John. Some would say it's a little more than confusion as well. A very quick research note I saw on LinkedIn today, this published by UBS from the wonderful economist John Paul Donovan, and he really had a thought-provoking note on lawyers versus economists running central banks, and he came away not ambivalent, but actually plus on it. Really doesn't matter. Lawyers just bring a different tone, whether it's Chairman Powell or Christine Lagarde.
Let's see if it helps in a crisis.
Well, you sound like a monetary economist there.
No, I think we've got to really consider that communication matters. It always matters. But in a crisis, innovation matters. How do you tackle the issues right in front of your face? And how do you bring the rest of the governing council, say the ECB, along with you, or the FOMC at the Federal Reserve for that matter as well? You need to be able to lead. And if you're going to lead PhDs and lead academics, you need to be able to speak in their language.
Speaking of crisis, we need to go to Arsenal. I got an email. Tom, we miss you in New York. We miss you when you're on the road like this, and there's just not enough Premier League chat. Give us an update, John, as we come out of the holiday season. Is Arsenal still playing football?
Cup match, Manchester United, Manchester City, taking place today, I believe, this afternoon, 3 p.m. Eastern.
We know where you're going to be.
We have a Manchester derby for you to watch.
It's a derby.
A derby. You should enjoy that.
That used to be a big deal. Is it more so now? Well, it's really not.
10 years ago, it was a big deal because Manchester United were a really good club. And now Manchester City is the better team, and that was not the case for the last several decades.
I mean, Yankees, Mets, and I think a large part of America understands the difference. It could be Dodgers, Giants, etc. What is the cultural difference between Manchester United and Manchester City?
I don't think there's a massive difference. I think it's a big rivalry. It's become a much bigger rivalry over the last 10 years. Imagine if the Mets got as much money as the New York Yankees, and then that rivalry had the volume turned up. That would be the situation with City and United.
Very cool.
In Manchester at the moment.
That's trenchant American analysis, John. I'm very impressed. I'm just sort of dazzled. There's a lot to talk about here, folks, as we move forward. And, of course, are we together tomorrow, John?
We are. You can actually come into the offices in New York.
That's good. I think we're together. Major shout-out from John Farrow and I to Ian Bremer and all at Eurasia Group. We looked at Latin America today and with the top risk for 2020. But yesterday is always a wonderful annual visit to Eurasia Group to get a sense of that. Thanks for the huge feedback on that. Right now, the Bloomberg NJIT STEM report, brought to you by New Jersey Institute of Technology, a top 100 national university, and the latest U.S. News and World Report college rankings. Learn more at newsnews.njit.edu. Here's John Tucker.
Yeah, and Tom and John, good morning. Here's what's making news in science, technology, engineering, and math. Calling 911 isn't exactly an option if your emergency happens to be aboard the International Space Station. And doctors generally don't make such high-altitude house calls. During a study into the effects of zero gravity on the vascular system, one crew member who isn't being identified was found to have developed a blood clot. That's a situation NASA had never dealt with before. A doctor consulted on the phone with the orbiting patient and prescribed a blood thinner that was stocked aboard the space station. According to the New England Journal of Medicine, the clot soon shrank, and within 24 hours back on Earth, it completely disappeared. A different kind of space remedy being tested by Elon Musk's rocket company, SpaceX, which just launched another batch of 60 Starlink satellites to create a global internet service. Astronomers fear reflections off the sun of the swarm of satellites will get in the way of their stargazing. So SpaceX is trying out an experimental anti-reflective coating. And did you find it hard to write long messages with your smartphone's little keyboard? Samsung may have the answer. It's showing off a virtual keyboard at the big CES Tech Show in Las Vegas. It uses your phone's selfie camera and artificial intelligence to track your fingers moving along almost any flat surface. And that is today's Bloomberg NJIT STEM report. John and Tom.
Do you still have a BlackBerry?
I do.
Do you?
No,
Do you?
No.
Do you
Hold
really?
on.
Do you?
Whoa. I use it as a backup. It's a secondary means of communication.
Okay.
It's so he can.
Yeah, but you know what? I'm so used to it. It's just,
John, it's so he can communicate with Biscuit.
It's great to have you back with us, John. Good to see you. Sitting in your seat too, Tom.
Yeah,
some
Tom, I hope you don't mind, but I am keeping your seat warm this morning.
I am so past.
Michael Barr with the top stories worldwide here in New York City. Good morning to Michael.
Good morning, John. Good morning, Tom. Iranian Foreign Minister Mohammad Javad Zarif says the killing of a top Iranian general by the U.S. was an act of state terrorism and Iran will respond proportionately. Zarif called it an aggression against Iran. Former National Security Advisor John Bolton announced he is willing to testify in the Senate impeachment trial. Republican Senator from Florida, Marco Rubio, was asked if he would vote to subpoena Bolton.
I wouldn't, because I think, in my view, our inquiry should be based on the testimony that they took, that we are acting on articles of impeachment, and I believe we should be constrained by the information that those articles were based on.
At the core of the debate over how the Senate impeachment trial will work is whether witnesses will be allowed to be called. We're learning more about the multi-vehicle crash on the Pennsylvania Turnpike that killed 5 people and injured dozens. Federal investigators say a packed bus passed a truck on the Pennsylvania Turnpike shortly before losing control and causing a chain wreck outside of Pittsburgh. NTSB member Jennifer Hamady.
Damage was extensive. We looked at the motor coach. We looked at the FedEx truck and one of the UPS trucks and 2 of the trailers, and I thought it was devastating. I imagine that if you were in this accident, that it was scary.
The bus was out of New Jersey. Facebook says it is strengthening its policy toward manipulated videos or deep fakes. It will also remove such media if it is edited or synthesized to mislead viewers. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. That's the news. Here's your price action. The S&P 500 positive, just 2 points on the S&P. Up not even 1/10%. In the bond market, treasuries a little bit firmer, yield just a little bit lower, down a basis point, just south of 180 on a US 10-year, on a 2-year note 153, and foreign exchange, the dollar showing some strength against the bulk of G10. From New York and Washington DC, this is Bloomberg.
With a Bloomberg Business of Sports report, I'm Michael Barr. The NFL's wild card playoffs ended with early exits for 2 major quarterbacks over 40 years old. The Vikings eliminated the Saints. New Orleans quarterback Drew Brees says he won't offer any hints on a potential retirement.
I'm not making any comments on that, other than, I've told you guys this for the last, couple of years. I've always just taken it 1 year at a time. And kind of reevaluate each off season, and then find the things I want to get better at and move on.
Brees isn't the only QB who is getting the retirement question. The Patriots' Tom Brady, after the loss to the Titans, says he does not know what's next.
Just very grateful for the experience of playing this year for this team, this organization, and over the course of my career too. Who knows what the future holds? So we'll leave it at that.
And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients, and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
Global news 24 hours.
This year, it's time to live well your way. Time to hit boots. To reboot your get up and go. Reboot your fresh start. Reboot your vegan choices. And reboot your... Make 2020 your time for a reboot. Save up to half price on wellbeing products in-store on Boots.com or via the app. Boots. Let's feel good. Subject to availability. Exclusions apply. See in-store or online for details. Offer ends 28th of January.
You don't just live in one room, so why should your Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super-fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
A day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. futures steady and stocks in Europe and Asia are advancing as investors attempt to set aside their fears about escalating tensions in the Middle East. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are up 2 points this morning. Dow futures up 18. NASDAQ futures up 28. The DAX in Germany is up 0.8%. 10-year Treasury up 4/30 seconds. Yield 1.79%. Yield on the 2-year 1.53%. NYMEX crude oil is down 0.9% or 55 cents at 62.72 a barrel. COMEX gold little change down $1.10 to 15.6780 an ounce. The euro 1.1179 against the dollar. British pound 1.3126 and the yen 108.41. Advanced Micro Devices said its new laptop processors will eclipse the performance of offerings from rival Intel, and shares are up 1.5% this morning. And General Motors warned pressure on its China business will persist this year as the world's biggest auto market suffers a prolonged slump exacerbated by a lackluster economy and the trade war with the U.S. And that's a Bloomberg Business Flash. Tom and John.
Karen, thank you. Thank you very much. Let's take it to foreign exchange now this morning, shall we, where the dollar is slightly stronger against the whole of G10. The euro negative 0.2%. The Aussie is where your underperformance is. The Australian dollar negative 0.8%. And the Japanese yen just about treading water. Here's the top line from Kit Jukes of SocGen this morning. FX markets have been blocked by an overvalued dollar's inability to make gains despite a favourable economic backdrop and higher rates than its peers. The result, narrower ranges for euro dollar than we've ever seen, and for dollar yen than we've seen since the 1970s. I'm pleased to say that Kit Jukes of SocGen, Chief FX Strategist, is with us. He phones in from London. Kit, great to have you with us. Just walk us through that a couple of steps further and what it means for this market in 2020.
Well, the backward-looking piece is, as in real effective terms, the dollar's very strong for reasons that are obvious. Better economy, higher rates, lots of benefit coming to it compared to either what's been going on in Japan or Europe even more starkly. What it means is if you want volatility, you have to get volatility, I think, with a weaker dollar rather than a stronger dollar, because it can only go up slowly. And the way you get that is either by getting better growth somewhere else or weaker growth in the United States, a return to expectations of easier Fed policy. We may have to wait a while before that really starts to kick in, but that's the way forward. I do think that some of the optimism around the U.S. economic outlook is at the top end of what's feasible, let's call it that.
What do you mean by that, Ken?
I mean that there's a consensus on the Bloomberg terminal. The consensus of the poll that Bloomberg does is 1.8% growth this year in the United States. That's not impossible, but it requires, I think, everything to go right for the U.S. economy to keep up that pace of growth. And then as the earnings cycle rolls over, in the face of the headwinds in manufacturing, which are already at levels that would suggest more economic weakness coming forwards, and given the lack of help from the rest of the world.
Do corporations have the ability to adapt and adjust to a SocGen view? I mean, the answer is they cut costs, right? I mean, I get that there'll be maybe a marginal earnings disappointment, but do we overplay that, Kit? Do we risk, being in cash instead of going up triple digits like Faro did last year?
It's a danger, this cycle has sort of bailed itself out time and time again on the back of easy money and a willing consumer. I just think that at this point, after the weakness we've seen in capital spending, after companies have spent so much money buying back their own stock and not investing in future productive capacity, whether they're manufacturing or non-manufacturing, there's a tendency to look at how much good that's done for the equity market and not see what seem to me pretty clear signs of a gradual deceleration in economic activity. Now, then we can slice it. It may well be that if the U.S. economy grows at 1.5%, that's still better than the rest of us. I wouldn't deny that possibility, but I think that would bring a weaker dollar with it.
If it's a weaker dollar, how do you play it? I mean, if you need to make alpha here or within the quiet of foreign exchange, you actually want to structure a 90-day or 180-day play, what do you play dollar against?
I think at the moment the market is going to be tempted to get optimistic about Europe and play it in the euro first, which I wouldn't have expected, but I prefer the Canadian dollar to the US dollar. That seems to me to work. If we get optimistic about life, there's a lot of money that would like to go into emerging markets. I suspect that's fool's gold this year, that slower growth will still go on hurting. And if things get really bad, we'll make all our money in the Japanese yen. But right now, I think we're going to start seeing Canadian dollar, the European currency bloc in general, start to slowly turn itself around as we get a degree of winding back of some of the pessimism we've had there. The euro's actually done better since the start of this year than I would have thought it would have done, given there hasn't been much news.
A proxy for the story that you describe, Kit, for many people would be Sweden, the Swedish krona. Your focus there at the moment, where is it?
I prefer the Norwegian krona to the Swedish krona, only because the Swedish krona was bought an enormous amount before they moved their rates back to zero. And a rate move to zero that's then signaled as staying at zero forever doesn't really do it for me in the medium term. And the danger with the Swedish krona is it's, along with the Australian dollar, the most sensitive currency to global trade. So if January the 15th sort of ends in a damn squib where there's a level one, first phase one trade deal is signed, but there's nothing coming behind it, then the Swedish krona may flatline rather more. I would rather have Norway, which may end up hiking rates a bit further, and if oil prices just stay here for 3 months, the Norwegian krona is going to look cheap.
Final question for you, Kit. Your outlook for policy at the ECB. Some people, just a little bit of chit-chatter, certainly not the base case, for many people at least, but a little bit of chit-chatter about the potential for a rate hike at the ECB over the next 12 months. Kit, your thoughts on that?
I think it's very unlikely unless we get some action on fiscal policy. I just, 1 month's worth of marginally better bits and bobs of data around the place is fine, but we need more. The German economy is not, by any stretch of the imagination, out of the woods as far as recession is concerned. What I would say is further easing of monetary policy in Europe serves almost no purpose at all from here. But I don't think that's the same as saying you can tighten monetary policy without fiscal help. That is, fiscal policy is everything.
Now, this has been a terrific sum, and particularly given a cautious economic growth call from Societe Generale. Kit Jukes has been wonderful with us over the recent years, and you hear him there on the dollar play. Futures at -3, Dow futures, futures +3, Dow futures up 24 as well, the VIX 13.89, showing the good tape that we've seen the last number of days. Dollar yen 108.41. It's been weaker yen over the last 2 days. Euro dollar 111.77 as well. So a churn there within the foreign exchange markets. I want to bring to your attention my conversation with Alan Greenspan. We are thrilled to bring that to you later today. We'll be doing that near 11, and then it will be fed out over all of Bloomberg News worldwide. From New York, from Washington, this is Bloomberg.
Down to his knee. Got Atul Shah, a senior project engineer at Mott.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in. Touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today. Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Cutting for the net, scores! Along the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business Radio.com and iHeartRadio apps and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
American economic power and future depends on trade deals.
In many of these countries, we're still seeing people struggling.
Finance.
We're in this vortex of uncertainty. These big companies, they just sometimes lack focus.
Investment.
The markets have become a little bit too addicted to the Fed.
Timing the market is just so difficult.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
Good morning, everyone. Tom Keene in Washington and John Farrow in New York. We welcome you to Bloomberg Surveillance. Coming up, without question, our interview of the day, if not of this moment since Friday, Stephen Cook to join us here in moments from the Council on Foreign Relations. John, just a really extraordinary news flow still out of Tehran, but markets a little bit calmer. Markets with some real stability starting yesterday afternoon.
Because so far this morning, Tom, and over the last 24 hours, we have no real new information on the main driver of financial markets. What will be the next step from Iran? What we do know is there 13 scenarios to respond to the killing of General Soleimani. What we don't know is what one of those options of the 13 they will actually choose. And I think we're still facing the same question we faced Thursday night into Friday. Will we look back at last week's strike as the point of escalation, or on the other extreme, will we look back as the moment that the administration established some kind of effective deterrence, or will it be somewhere in between those two extremes, Tom? That's the question we face today. That question hasn't changed. We still look for an answer.
John Farrow and I, Francine Lacroix, Lisa Abramowitz, Paul Sweeney, working round the clock to try to bring you conversation on this. Our team, beginning Friday, with Sir Tom Beckett of the United Kingdom, and over to Admiral Stavridis, General Kimmett, and many other voices to give perspective. But it is not a surprise to those that know international relations that, without question, the most trenchant essay that we have seen is from Stephen A. Cook. He is with the Council on Foreign Relations. His book, False Dawn, is absolutely definitive and at times heart-wrenching on his experience of the Middle East, and we are thrilled that he could join us this Washington studios. Stephen Cook, you stopped this debate, distracted by John Bolton yesterday afternoon, with your publication in Foreign Policy. You minced no words. We should leave and leave now. What has been the response to your essay yesterday?
Well, it's actually been rather surprising. There's been a lot of support for the essay. I've heard from members of Congress, former members of Congress, former ambassadors, my dissertation supervisor, and a variety of others. It's been a former Marine, two former Marines who served in Iraq. What
did they say?
They've said, look, after now almost 17 years, you're calling a spade, that there's not much for the United States to do in Iraq, and to take out Qasem Soleimani over Iraq, a place where Americans are vulnerable for no discernible reason, seems to be a policy that is unnecessarily reckless.
You're the pro, I'm the amateur. That night, 2 a.m. in the morning, I stood in the Bloomberg television studios in New York and opened the National Geographic Atlas, looked at the map and said, you've got to be kidding me. That was in 2003. You just visited Iraq, which we agree is totally changed from 03, 05, and on and on and on. What did you observe there that says to you, leave and leave now?
Well, the bottom line for me in Iraq was that Iraq really isn't a state.
That map no longer exists.
There is a territory that we call Iraq, and there are discernible borders. But as the classic definition of a state that controls the monopoly of violence, that can enforce property rights, doesn't exist. You have a myriad of armed groups fighting over national resources and impoverishing what would otherwise be a wealthy country.
It is simply a river into the Persian Gulf. On the right side is Iranian oil fields. On the left side, Iraq's treasure. What keeps Iran from just not moving west over the river to pick up all those oil fields?
It really doesn't have to. Iran, as any Iraqi will tell you, Iran is the most influential foreign presence in the country. The protests that broke out in Iraq in October were in part about Iranian dominance. Our killing of Qasem Soleimani has really changed the terms of the debate. Those protesters still want Iran out, but now the Iraqi parliament also wants the United States out.
Stephen, is that the president's objective, to get out of the Middle East? Many people thought it was, and now they're scratching their heads after the last week. Is it still his objective?
Well, your question speaks to the strategic incoherence of the administration at this point. The president says he wants to reduce America's footprint in the Middle East, yet he takes actions that threaten to draw the United States further into the region.
Stephen, if the United States retrenches, where does it leave the coalition and the fight against ISIS in the region?
Well, it's a very good question, and I think that the United States can continue to fight terrorism without having as large and as vulnerable a footprint as it does in a place like Iraq, where we're really not welcome, and that where we're so hamstrung and so impotent that there's not much that we can do.
At the moment, as you know, over the last several decades, General Soleimani was at the epicenter of an effort to build out a Shia sphere of influence. I imagine there are some allies of the United States, that did want them in the Middle East to help them push back against that. Stephen, your thoughts on that situation?
Well, I think that it's undoubtedly the case that the Saudis, the Emiratis, the Israelis are particularly interested in ensuring that the United States remains in the Middle East to counter Iran. I don't think that anybody is arguing that the United States should just withdraw from the Middle East. Iraq is a zombie state. Iraq is not a place where the United States can do much good at this point. But we have lots of presence, and there's a smart way to be in the Middle East. And being in Iraq and killing Qasem Soleimani over Iraq doesn't seem to be a good thing.
Stephen, we've heard very little from Israel in the last couple of days. Why?
Well, the Israelis are obviously quite concerned about blowback on them. It's well known that Hezbollah, an Iranian proxy Lebanese terrorist group, has hundreds of thousands of rockets that can be rained down on Israel. Now, Israel's made a lot of progress in developing defenses against this, but the sheer number of rockets in the possession of Hezbollah is deeply worrying to the Israelis, and they do not want to be implicated in this. They don't want to be the focal point of Iran's retaliation.
Isn't it quite original, Stephen, that we have all of these various different contradicting interests in the region, and yet we struggle to identify one nation in the Middle East at the moment that was happy with that strike Thursday night into Friday? How original is that?
That is, I think, a very, very good point. We are at a point in the Middle East where it's very, very hard for American policymakers to define exactly what's important to us. And this leads to a series of contradictory policies. Look, President Trump has been unpredictable, but this is also a problem with the Obama administration, identifying what's important, developing a strategy, matching up national resources to that strategy, and pursuing those interests. It's been a problem for some time.
All of you nationwide, we welcome you to Bloomberg Surveillance. John Farrow in New York. I'm Tom Keene in Washington. And with us, Stephen A. Cook of the Council on Foreign Relations. And again, you've seen my rave review for his False Dawn, which is decidedly not dated, on protest, democracy, and violence. Stephen A. Cook, how do you respond to every pro I've ever talked to that said, look, Iran is the one real economy, real nation, real culture, real middle class of the Middle East? Have we just frittered it away with the agony since 1979? Have we handed away forever Persia?
Well, I think it's a very, very tough issue. There has been a lot of effort on the part of people in Washington to think of ways on how to improve relations with Iran, but Iran has to want to do that as well. We had the Joint Comprehensive Plan of Action, but then once that was signed, General Qasem Soleimani went out to consolidate and extend Iran's influence around the region. That made it very difficult for actually people on both sides of the debate to defend a warming of relations between the two countries.
Let me ask you this question, and I asked it of Admiral Stavridis and General Kimmett as well. We've got a lot of people listening with family in the military, exposed in a new and different way in the last 3 or 4 days. How do you respond when you see troop movements and troop announcements? Bloomberg with the 2,200 Marines moving from the Mediterranean into the Persian Gulf. How do you as a academic respond to these military movements?
Well, one of the things that concerns me is that we are moving forces back into the Middle East, but it's entirely unclear to anybody why we are doing it. If there is an interest, if there's a strategy that is at play here, then we need to know about it. Otherwise, these guys are being sent to the Middle East for no discernible reason.
Folks, I'm going to rip up the scripture. This is so key. And thank you for your notes on our coverage from Friday. Stephen Cook, it's just simple. The military pros and the academic pros say the same thing. What's the strategy? How do we find an American strategy for the Middle East?
Well, I think this is a problem that any president at this point is going
to
have.
I'm not going to pin this on President Trump.
That's right. The Cold War ended 30 years ago, and the world is changing. And I think that it's very, very hard after now being in the region in this very significant way for almost 2 decades. It's very hard to discern what it is important to the United States. Is it building democratic societies? Is it fighting terrorism? Is it oil? Is it Israel? No one has a real clear answer to this. And I think it's up to us, people academics, military strategists, and others to debate this till we decide what it is.
With the great sacrifice of all in America off of September 11th of 2001, and to steal a line from Fareed Zakaria, what does the post-9/11 world look like to you?
It looks like a mess. There is no real... It seems it's a very long time ago in 9/11 where we had this purpose, and we've lost it. We've gotten wrapped around the axle on politics in the Middle East, on things that aren't as important to us. It's now time to sit back and consider exactly what's important to the United States in this part of the world.
Well, thank you so much for coming. It's Stephen A. Cook, folks, of the Council on Foreign Relations. I will put out on Twitter and LinkedIn today his important essay in foreign policy. John Farrell?
Tom, thank you. I know some of our listeners might have been offended by that use of the phrase former Marine. I'm sure no offence was intended. Once Marine, always a Marine. As someone who's got family who's served in the Corps, I'm aware that there is some sensitivity to that term, and I apologise if any offence was caused. Let's move on, shall we, to some of the top stories around the world. From New York, let's say good morning to Michael Barr. Good morning, Michael.
Good morning, John. Good morning, Tom. Britain's foreign secretary is traveling to Brussels for talks today with European counterparts about the situation in the Middle East as tensions soar after a U.S. airstrike killed a top Iranian general. The talks are expected to assess the state of Iran's 2015 nuclear deal with world powers after Tehran announced Sunday that it is withdrawing from further commitments in the agreement. Meanwhile, Iran's foreign affairs minister, Javad Zarif, says it is likely just a matter of time now before U.S. troops will withdraw from Iraq.
Their days in our region are numbered. Not because anybody will take any action against them, but because they are not welcomed.
At least 40 people died and 213 were injured in a stampede at the funeral for Iranian General Qasem Soleimani. A massive 6.4 magnitude earthquake has struck off the southern coast of Puerto Rico. Today's early morning quake comes after Monday's 5.8 quake and aftershocks. This man was rattled by the new massive aftershock at the Decanter Hotel in San Juan.
Power in my room here in Old San Juan is out.
At least 8 people were injured in the city of Ponce. At Cape Canaveral.
3, 2, 1, 0. Ignition.
A SpaceX Falcon 9 rocket lifted off last night, deploying 60 communication satellites into orbit. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you very much, sir. That's the news with Michael Barr. Let's get you some price action, shall we? The S&P 500 totally unchanged. The S&P 500 up, not even a single point this morning. Good morning to you all. You are listening to Bloomberg Surveillance. We're live on Bloomberg Radio. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversations from Bloomberg Television. Here's Taylor Riggs.
Columbus, Ohio is one city looking for opportunities to reinvent its transportation system through smart technology. For more, I'm joined by Columbus Mayor Andrew Ginther. Mayor, great to have you.
Thank you.
We talked to a lot of state and local government leaders. They all want to be the new tech city, the new smart city. What have you done specifically in the last year to really make yourself a smart city?
So many things, the connected vehicle environment, the integrated data exchange. We now have autonomous shuttles that we've been using in downtown Columbus, and we're going to launch. We believe in Columbus that mobility is the great equalizer of the 21st century. And so we really want to make sure that we're using innovation and technology to help people improve their own lives.
So this piques my interest, the first self-driving shuttle operating on public roads in a residential neighborhood. Given all the safety concerns about driverless technology, how did you overcome that perhaps with some of the local regulators to make sure that you are efficient but safe?
We started working with the residents of Linden, and that's where this shuttle is going to help connect people to the community center, to the settlement house, to housing and other opportunities right there in Linden, continuing to work with federal, state, and local officials to make sure this is safe. We've been working on it in the last month or so, and it'll go live for the public in January.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
Business app and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. It is 8:17 on Wall Street, and futures, they're a little changed this morning. Let's go to the first word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
Hey, good morning, Karen. U.S. futures remain quiet since the last time we spoke. With Dow futures up 10 points, S&Ps are a little changed, and Nasdaq futures are higher by 23. The U.S. 10-year yield at 1.8%. Gold is also a little changed, and WTI crude futures are down 0.9%. Japan rose 1.6% overnight, while European markets are also in the green, led by gains in Germany. Back in the U.S. on the economic front at the 8:30 trade balance and at 10 o'clock ISM non-manufacturing factory orders and durable goods orders. After the bell last night, Microchip Q3 preliminary sales topped estimates. And in other news, American Airlines reached a settlement with Boeing, and Tesla kicked off production in China. Shares are up 1.8% in the pre-market. In deal news, Accenture to buy a cybersecurity services business from Broadcom. And wrapping things up, Chevron cut to underperform at Bank of America. Chubb was cut to sell at Goldman Sachs, and Bank of America and JP Morgan were both cut to neutral over at UBS. Live from the first breaking news desk, I'm Bill Maloney. Karen?
Bill, thank you. To hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK, and that's a Bloomberg Business Flash. Tom and John.
Karen, thank you very much. Live from the Interactive Broker Studios here in New York City, alongside Tom Keene over in Washington,
amazing.
D.C.
I can see right down to the Gucci store, John.
From where you are?
It's right. I could see it. Right,
that doesn't surprise me whatsoever.
It's just right down there in this beautifully rebuilt area. We're west of Ford's Theater, about 4 or 5 blocks.
Everywhere you go, there is a luxury store and a bar.
It's amazing. It's amazing.
Where were you last night?
Oh, I don't know. I was home studying.
You don't know.
I was home studying for my discussion with Alan Greenspan later this morning.
What time is that, Tom?
It'll be 10ish, 11, and then we'll feed it out, and we're looking for a weekend show as well with it. An important discussion. I spoke to Chairman Greenspan yesterday, and this will be a very timely discussion on the future of our economics.
I'm looking forward to that. It comes out of Washington a little bit later this morning. It is January 7th, and we are already getting revisions to year-end targets.
Gina Martin Adams must be next.
The latest from RBC, and not Gina Martin Adams. Lori Calvasina looking for 34.60 3460, her year-end target, boosting it to 3460. She said this should be another upward year for the stock market, though it's likely to be closer to trend levels and accompanied by greater volatility. Pleased to say that Gina Martin Adams is with us, Bloomberg Intelligence Chief Equity Strategist. Your thoughts on RBC's call, Gina, then we'll get to the call at Bloomberg. More volatility, closer to trend levels, higher equity markets through the year, though. Where do you come down on that?
I can sympathize with the idea that equity markets continue their advance that they've been in for more than a decade now. I don't know about the higher vol call. I think that you'd have to have a pretty significant change in market structure in order to get higher prices with higher volatility. That certainly was the case in the very, very late market extension of 1998, 1999 into 2000. If that's your call that we're going to go into some kind of melt-up phase, then you will see volatility rise as prices rise. I think I really struggle to make the case that we're in a melt-up. I think instead, investors are somewhat hesitant. It's really a story of liquidity driving prices. And that to me means volatility stays low as prices advance. That would be my only issue, I think you do need to see a big change in the way that markets behave and see a massive shift in sentiment as well, really driving some kind of melt-up phase in order to have prices rise with volatility rising.
So let's talk about something important because you've touched on it. I remember in January 2018, I think it was, there was a feeling that maybe this was it. This was the melt-up, that final stages of a bull market where things start to rip and everyone starts to participate. 2 years later, here we are, still talking about the same dynamic potentially. Gina, the characteristics of a late cycle, end of cycle melt-up in a bull market, what are they and why is it so different to what we see in the last couple of months?
So there are really just several pillars that characterize a melt-up in our mind. You have to have rising prices on rising volatility, on deteriorating fundamentals. That means a decelerating earnings growth outlook, on just a massive explosion in optimism reflected in the sentiment surveys. That we've been missing a lot of those characteristics at various points in this cycle, but the one that really we've struggled to sort of find is that massive optimistic sentiment. I think in fits and starts you do develop periods in which investors are a little bit more enthusiastic. Late 2017 was one of those periods. We did see a major market peak occur in early 2018, but it proved not to be the secular bull market peak because you didn't have enough long-term build and optimism, I would suggest, to really support a massive melt-up peak developing. I think we're in a similar state now. We probably are a little excessively optimistic. You see it in the strategists all caving on their forecasts, right? I used to be one of these strategists, and thank God I don't have to do this forecasting anymore because it is really, really, it's tricky. When the market is inflating on sentiment and sentiment alone, it's really difficult to predict how far it's going to go. But we haven't seen a massive improvement in fundamentals to really drive those market outcomes right now. So we are probably slightly over-optimistic in the short run. That said, most of the flows over the course of the last several years have gone into the bond market, not into the equity market. You did see some equity inflows at the end of last year, but not nearly as much as you would normally see when stocks are peaking and sentiment is overly enthusiastic.
Gina, in the zeitgeist this morning, is any given company switching from share buyback to dividends, increased dividends? Walk us through that. In this case, it was an essay on Apple Computer, and they really need to get their act together and just switch from share buyback massive to dividend growth more sprightly. What's the so what there? What's the distinction between share buyback and dividends?
I think it's signal more than anything. I think that traditionally the signal of a switch from sort of a short-term boost to share prices via share buyback to a longer-term commitment to dividend is a signal of a slowing longer-term growth outlook to most investors. And so the result is if you are committing to a long-term higher dividend pay, higher dividend growth over an extended period, the investor thinks, fantastic, it is the certainty of income. However, it also maybe suggests you don't have a whole lot to do with your cash. You don't have a whole lot of investment prospects. Maybe your long-term growth rate is going to slow going forward. I mean, you traditionally see the slow growing staples, more defensive plays as the bigger dividend players in the equity market.
Gina Martin Adams with us as we're on the Dow 29,000 watch. I'm kidding, Gina.
I'll take
amazing.
it, Tom. You know,
You'll
it's
take
fine.
it. It's a remarkable. We're 28,703 close on the Dow. SPX closed 3246, which is John. We've stretched out so far beyond sort of what the linear path of the data screen in front of me every day that I really, in some ways, lost perspective. Sort of like where we were on bonds, 4 or 5 months ago.
And a big retracement since then from 4 or 5 months ago. We were in and around 1.5%, seemingly at one point heading towards all-time lows on a 10-year yield at the back end of summer, at the end of August. Right now, 1.81% on a US 10-year. The Treasury market basically unchanged this morning. Now, yields going absolutely nowhere. In the equity market, muted price action there too. The S&P 500 up just a handful of points, positive 2 points, and up not even a tenth of 1%. From New York and Washington, D.C. this morning, good morning to all worldwide. This is Bloomberg.
Won't you please help me?
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rate may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a Bloomberg Money Minute.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg Radio, where your economic indicators are brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. Let's get you some economic data, shall we? Here is Vinny Giudice.
Okay, Jonathan. November's trade deficit in goods and services, the smallest since 2016, $43.1 billion. A goods deficit with China at a 6-year low as imports drop. The data showing a bit of a thaw in the trade war with China. Exports are up. We see, so maybe a little bit of a temporary improvement, long-term improvement, I don't know. 10 a.m. Wall Street time. Non-farm, non-manufacturing, that is, index from the ISM, the services index. Economists looking for some improvement. Also at that time, 10 a.m. Wall Street time, factory orders. Again, the trade deficit smallest since 2016 November, $43.1 billion. I'm Vinny Giudice, Bloomberg Radio. Let's go back to New York.
Vinny, thank you so much. John Farrow in New York. I'm Tom Keene in Washington as we look at the economic data. John, durable goods to me will be fascinating. I have no idea what to do with non-defense X-Air, given all the trials and tribulations of Boeing.
Look out for the non-manufacturing guys, Sam. At 10 a.m. Eastern as well, Tom. Manufacturing has been a tough spot. On the ISM, I should point out, on that particular reading of that sector, not terrific. Services holding up. That's the story worldwide, particularly in Europe, and I wonder if that continues.
One of the great themes of that has been Neil Dutta's excellence at Renaissance Macro. He's really been quite good of pushing against the certitude of the gloom crew. Neil Dutta, let us reframe right now your call 12 months forward on GDP. What is that statistic?
Well, I mean, if you look at your Bloomberg News consensus, they have GDP running basically below 2% all year. And, I wouldn't be surprised if we print something, close to 2.5 for 2020. I think the composition of growth is improving. I mean, you look at, investment spending will probably be a little bit better, and inventory investment certainly will be a little bit better. The trade deficit's somewhat narrower. We've seen the dollar come off the boil of late. That's going to support exports and help narrow the trade gap. So, it's not an economy that's off to the races, but, it's always about, this job is all about what is the market pricing in and what do you think the likely outcome is going to be, and then pick your battles with the consensus wisely. And I think the consensus is a little bit too cautious on growth for 2020, which is one of the reasons why I think this upward march in equity prices in the U.S. will probably continue.
So
that's my view.
Well, Neil, you've been wonderfully resilient about this versus the gloom crew, and you've just explained.
Well, so is the economy, Tom.
Well, right? but you explain how we get there. How do you look at the resiliency of the American consumer? Is that a foundation for your optimism, or is it almost a one-off to your optimism?
Well, certainly consumer balance sheets, household balance sheets are in a much better place than they've been in years. Look at the household savings rate. It's actually been rising even as consumer spending has been doing reasonably well. We've seen, in addition, financial obligations ratios at rock bottom levels. So the household balance sheet's very strong. The upside risk, of course, is that, we've seen this recovery in equity prices. People feel better about their situation. They begin to draw down some of that precautionary savings, and the consumer actually does even better than what it's been doing. So, I think the consumer is basically running in place. The risks are to the upside. And we know that. That's also reflected in the housing market. It's sort of been the one thing that no one's been talking about. But, new home sales are up, 10 to 15% over the last 12 months? Those are signed contracts on new houses. That leads construction activity. So I think construction activity is also likely to be a tailwind for growth in 2020. So, 2019 wasn't a great year for the economy. It was mostly about consumers. I do think we'll have a better balance in the year ahead.
Neil, you know how this works. There's always a data point somewhere to confirm your price for anyone looking at the economy right now. And if you're bearish on the economy, you might be focused on manufacturing. So 2 questions from me. The best read to get on manufacturing right now? You've done some terrific work on pointing out the difference between, say, the ISM and the PMI. And my follow-up question to that, Neil, would be the importance, even if you do get a read of weakness in manufacturing, the importance of the overall economy and how that's diminished over the last 10 years. Just your point on those 2 things.
Well, I mean, there's an issue between the 2 major surveys of one of sample size and construction, right? So the market PMI actually overweights the forward-looking indicators, like new orders, while the ISM equally weights them all. And also, we've seen, in addition, it's a sample size, right? Market PMI has 800 versus ISM of 300. Some have made the point that, the market PMI is less sensitive to what's going on in the global economy. The ISM is more sensitive to what's happening globally. So that's something else to think about. But, when I look at manufacturing, it comes back to the inventory cycle, John. If you look at even the ISM, you still have more of the server respondents telling you that their inventory levels are too low than too high. That's very unusual with the ISM sitting this far below 50, okay? So my sense is that you get an inventory tailwind, and that's going to necessitate further gains in manufacturing production. So I would be surprised to see the ISM still sitting where it is, this time in, let's say, 3 to 4 months. So again, it's not about where the data point is right now, because that's all the bears are talking about. It's about why is it going to stay here in 3 months? And that's a much harder call to make. I think it's not likely to stay there. It's likely to go higher.
Neil, you expect that inventory build to be front-loaded this year. How do you think that's going to play out through the course of 2020?
Well, it means that, it's not just the U.S. It's also, look at Europe. If you look at the pace of contraction in inventories in Germany, for example, and we haven't seen anything like that since the sovereign debt crisis. So, in other words, it wouldn't take much in the way of global growth and, European growth stabilization to prompt gains in production activity in those economies.
Yeah.
So I think you have a bit of a synchronized inventory cycle in the Western world over the first 6 months of 2020.
Neil, do we need to get used to subpar growth? There was a time it was morning in America, 3% plus, on we go. The president has hit a real resonance with the American people in search of this. Do you, as a card-carrying optimist, give up on 3% plus growth?
So I think the only way you get to 3% plus growth, Tom, in any sort of sustained way is if you see a inflection in productivity. Productivity growth historically is a process. It doesn't turn on a dime. What you can say is that on the plus side, if you look at the last, let's say, 5 years, productivity has been growing a little over 1% at an annual rate. Now, that's very low, but if you look at the 5 years before that, it was basically 0.5%. So we've sort of been slowly growing productivity. I would say the one positive that I've seen lately is that even though we've had a weak investment year in the last year, I do think capital deepening is growing at a more normal rate than it had been. And so, maybe there's a chance for productivity to grow something looking closer to normal this year. Maybe 1.5%. But again, it's a process.
Okay.
Do we need? The question is, do we need 3% growth? I think, we're talking about. We've had, improvement in median household income, declines in measures of poverty, low unemployment, and that's all happened, with growth running slightly above 2. So, to me, I think 2.5 is pretty good.
This is so important. We have capital deepening. With your optimism, does labor get a better share of what's out there, or is that just from a bygone time?
Certainly, that's what the Fed is trying to engineer, right?
Totally agree.
And we have seen. Certainly, we have seen some increase in labor share of income. One of the interesting things I think we're seeing right now, though, in the labor market is sort of this. Not necessarily falling labor share, but shifting of where the labor income is going, because we're seeing, folks at the low end see much faster wage growth, but interestingly enough, folks at the high end seeing slower wage growth. So that premium that the high end had been sort of commanding or compelling isn't as strong as it had been before. Maybe because the labor market's tighter.
Hey Neil, always great to get your thoughts. Happy New Year to you and the team. Neil Dutta there, Renaissance Macro Head of Economic Research, joining us on the upside risk to the economy in the United States of America through 2020 and ahead of payrolls Friday, just a couple of days away. Change in non-farm payrolls, the median estimate in our Bloomberg survey, moving target, as you know, as we approach Friday, but at the moment, 160,000 for the month of December, down from that monster 266 in the previous month. Much more on the labour market in America through the week, right here on Bloomberg Surveillance. For now, let's get you some top stories worldwide, shall we? Let's cross over to Bloomberg's Michael Barr. Good morning to Michael.
Good morning, John. Good morning, Tom. Iranian state TV reports more than 50 people died and 213 were injured in a stampede at the funeral for Iranian commander Qassem Soleimani. He was killed in the U.S. drone strike last week. The burial in Soleimani's hometown of Kerman in southeastern Iran was postponed indefinitely. The U.S. government is warning ships across Mideast waterways, crucial to global energy supplies. There's the possibility of Iranian aggression against U.S. ships in the region. Iran's Foreign Affairs Minister Javad Zarif says the American policies allowing a continued military presence in Iraq are a failed strategy.
The United States has been in this region for many years and has not brought itself or the region any security. We leave it at that.
Defense Secretary Mark Esper is trying to clear up confusion over a letter that indicated the U.S. was prepared to pull out of its troops in Iraq. Esper says the letter was only a draft, but that it was unsigned and sent to the Iraqi military by mistake.
There is no decision to leave, nor do we issue any plans to leave or prepare to leave. We are committed to the de-ISIS mission in Iraq alongside our allies and partners.
The letter circulated on social media on the same day the Iraqi parliament voted overwhelmingly in a non-binding resolution to expel American armed forces. There is no end in sight to the unprecedented wildfires consuming Australia. Fire whirls are spinning a red haze so thick, Air Force pilots are forced to abandon their rescue mission. Families are forced to take shelter on the coast. Fires have scorched more than 14 million acres. Scientists believe up to 500 million animals have died in these fires. At least 24 people have died in the blazes. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you very much. Tom, the pictures coming from down under, absolutely devastating. And I know that we do have some of our listeners out in Australia, particularly on the podcast as well, and our thoughts go out to all of you, your family and your friends, as the country I know is going through quite a difficult time.
Really extraordinary, and I've been watching the political battle of it as well. Of course, the nation is just riveted by this, and John, I think there's just a lot more news flow to come out of this, and maybe it is a precursor for other debates of climate change. And of course, just in the last 24 hours, a lot of talk about some of these fires actually being set. There was some of that talk in California as well. So it bears careful watching, to say the least.
We'll find the time to talk about it through the week, that's for sure. Equity futures ahead of the opening bell, around about 45 minutes away. We are unchanged on the S&P 500. If you want to be really precise, we're down around about a single point on the S&P. Outside of that, in the bond market, stage set as follows for you on Treasuries. Yields unchanged, 180 on a 10-year. 2-year note, or 154. And in foreign exchange, dollar strength, the story through much of the session, is the story on my screen right now against the whole of G10. In the commodity market, the crude rally fades. Brent crude down 0.8%, $68 and around about 38 cents. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Some of the hottest rental markets saw some of the slowest rent growth last quarter.
The leading metros were the ones that did not see as much growth.
And Barbara Denham, senior economist at Moody's Analytics Research, says that's particularly true in Seattle, San Francisco, and San Jose.
They used to see quarterly rent growth of 2.0% or higher.
And Denham says people worried about the U.S.-China trade war and the prospect of a recession.
Whatever hesitancy there has been in the overall economy, it was definitely highest in the tech markets that have seen the highest growth rate.
Nationally, apartment vacancies increased in 35 of 79 metros, with big jumps in Fairfield County and New Haven, Connecticut, plus Charlotte and Dallas. But rents still increased in some metros, including Tucson, Pittsburgh, and Phoenix. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Connecting to...
This year, it's time to live well your way. Time to hit boots. To reboot your get up and go. Reboot your fresh start. Reboot your vegan choices. And reboot your... Make 2020 your time for a reboot. Save up to half price on well-being products in-store, on Boots.com, or via the app. Boots. Let's feel good. Subject to availability. Exclusions apply. See in-store or online for details. Offer ends 28th of January.
Pascal gobbles up the rebound and slammed it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. The U.S. trade gap narrowed in November to the smallest in 3 years as exports advanced amid a thaw in the trade war with China, while imports fell to the lowest since 2017. The overall U.S. trade deficit in goods and services shrank to $43.1 billion in November from $46.9 billion the prior month. The Federal Reserve Bank of New York's $35 billion operation to inject cash into the financing system was oversubscribed today. It was the first time since mid-December that primary dealers' bids exceeded the maximum amount. U.S. futures, they are little changed. Stocks in Europe and Asia advancing as investors attempt to set aside their fears about escalating tensions in the Middle East. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures, they're down about 2 points. Dow futures down 17. NASDAQ futures up 15. The DAX in Germany is up about 0.8%. 10-year Treasury up 1/32, yield 1.80%. Yield on the 2-year 1.53%. NYMEX crude oil is down 0.7% or 47 cents at $62.80 a barrel. And COMEX gold little changed at $15.6860 an ounce. The euro 1.1167 against the dollar. British pound 1.3120. And the yen at 108.45. And that's a Bloomberg Business Flash. Tom.
Thank you so much, Karen. Greatly appreciate it. We welcome all of you worldwide, and one of the things we like to do at the beginning of the year is meet with all the good people at Eurasia Group. This is, of course, Ian Bremmer's shop, Meredith Sumter driving their economic research. And part of it is simply Dr. Bremmer's desire to gather together different and very smart people on these different topics. One of those is Risa Grice-Targos. She joins us now with the summation of Latin America for Eurasia Group and the risks of this year. Risa, just to look back first, no one saw 2019 coming. What was the why of the populism and protest across Latin America last year?
Yeah, Tom. So I think it differs by country, but a general trend that we saw in all of these uprisings was a frustrated electorate, angry voters that are frustrated with sluggish economic growth, with government's inability to deliver on their demands, and with corruption scandals.
It may be corruption scandals or it may be that, but it's also just traditional economics of South America and Central America maybe removed from the East-West debate. That's something we learned in textbooks 20, 30, 40, maybe 100 years ago. Is it still that way?
Well, I think for the countries that experienced the most instability late last year are really those South American economies that benefited the most from the commodity boom. So in that sense, are economies that are very connected to China, while economies like Mexico and Central America that are more closely connected to the U.S. were somewhat insulated from that shock of having, huge new middle classes that had come out of a decade of growth and real economic success, only to see the kind of privileges that they had just earned suddenly in jeopardy by worsening economic conditions.
Let me talk about Chile. Adam Posen was with us earlier from the Peterson Institute, and he really centered in on Chile. And if I look at your charts within your top risk 2020, folks, you can get that complete report from Eurasia Group. The abruptness of the Chile collapse seems stark. What is distinctive about Chile?
Chile, it's been the model of success in the region, and so I think in that sense it was a real shock to everyone. But it's also a story of frustration, very deep inequality, and so I think frustration with that economic model that so many from those other governments in the region and those of us abroad viewed as a model. And our view on Chile is that those frustrations are going to be very difficult to satisfy. Now, obviously, President Piñera has been scrambling to promise new spending, to reform the kind of economic model there, and to rewrite the Constitution, which is a process that we're going to see playing out in 2020. But that's something that, we think is obviously a risky process. It's risky for investors, and also has the potential to actually disappoint voters in terms of the change that they're looking for.
Is there a model away from resource utilization and agriculture? I mean, that's been the model for 200, 300, 400 years. Can there be a new model?
I mean, I think a lot of these economies, the kind of economic diversification agenda was really abandoned or slowed, again, during this commodity price boom in which everyone just started focusing their resources again on natural resources. And so I think now these economies have the potential to start to diversify away, maybe revisit those models. But obviously that's something that's going to take a lot of time to develop.
Let's look forward now to 2020. There has to be an action plan. Is the United States assisting country to country these nations in dealing with the gross inequalities you speak of?
I think that the U.S. is not that focused on the region at all, to be honest. I mean, obviously there's the focus on Venezuela, which I think has also lessened a bit in recent years. The U.S., I think, is involved to the extent that, they're supporting IMF programs in Argentina and Ecuador. But again, these are also, I think, in general, we see governments that are trying to do very difficult economic adjustments, either with the IMF support or without, and are really struggling to carry through on those adjustments in a context in which voters want more spending. They want more from those governments rather than austerity.
Oh, terrific briefing. Thank you so much. Risa Grace-Targo with Eurasia Group, and of course, looking at their top risks, and this is Latin America. I really can't say enough about the series. And for those of you coast to coast, their number one risk this year, they lead not with Germany, not with China, as you'd expect. Yes, it's in there, but they lead with the U.S. domestic political economy. Really trenchant report. I really suggest that to you. Always trenchant. Paul Sweeney joining me in New York. York. I'm in Washington today, folks. Look for my interview with Chairman Greenspan coming up. Paul Sweeney, one of the talks today out there in the zeitgeist is Apple and other tech companies stop the share buybacks, establish a dividend, or raise the dividend as well. I don't think that's what tech investors want, do they?
You know, historically, Tom, I think you're right. I mean, tech investors wanted these companies to reinvest their capital back into their own businesses because they were such great growth businesses to begin with. But a lot of these tech companies, you just take a look at Apple. They've got $100 billion of net cash on their books today, net of debt. They've got $60 billion of free cash flow every year. What do you do with it? I mean, you got to start returning that to shareholders. And I think a lot of tech companies that are, again, very cash proficient really have an issue there.
And I don't want to speak for Mario Gabelli, but let's try it. What Mario Gabelli said would be, well, buy back more shares. I mean, you're already buying back a lot of shares. Just buy back more shares, right?
Yeah, exactly. I think, and generally shareholders like that. And I think, again, given the cash generation capabilities of some of these companies, they're so big, the acquisitions you do make just don't even move the needle for the most part. That's why some Apple investors say, hey, go out there and buy a huge media company. But investors are saying, maybe let's just get some money back in our pockets.
I'm still waiting to see a pro report that says, hey, Apple, buy a big media company. Exactly. I have not seen that. Nope. What I do see is yields churning. The dollar, actually some dollar strength this morning. The yen, 108.45. S&P futures at -4. Stay with us from New York, from Washington. This is Bloomberg.
Why has J.D. Power Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Haskell gobbles up the rebound and slams it down. Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hear every play of the NFL playoffs live with the NFL on TuneIn Premium. The divisional round kicks off Saturday at 4:35 p.m. Eastern when the Vikings travel across country to take on the 49ers in an NFC showdown in Santa Clara. The action continues at 8:15 as the Ravens host the Tennessee Titans in Baltimore. On Sunday, listen live beginning at 3:05 Eastern as the Texans and Chiefs square off in Kansas City, followed by the Seahawks and Packers at 6:40 in Green Bay. The excitement of the NFL playoffs is on TuneIn Premium. Upgrade today.
We can't make traffic move faster during rush hour, but we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now. You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
First time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The good news is the economy is strong. The bad news is the economy is strong.
Financial crises take a really long time to recover from.
Finance.
The strong job market's pulling people back in.
You can't have for very long, monetary union without a fiscal union.
Investment.
What we preach is extreme diversification.
It's hard to have sustained productivity without capital investment.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney in New York, the Bloomberg Interactive Broker Studios. I'm Tom Keene in our Washington studios with 99.1 FM in Washington. We welcome all of you on Sirius XM Channel 119. Nationwide, Boston 106.1 FM as well. Good morning. Bloomberg 1130 in New York. Early good morning, 960 the Bay Area in San Francisco. And just extraordinary news flow. Of course, we've been monitoring headlines, a flurry of headlines early this morning. The Associated Press, Paul Sweeney, talking about the monitoring and careful study by the United States of the maritime waters of the Middle East. And then a real quiet, Paul. I think over the last couple hours there's been a dearth of news on Iran and Iraq, hasn't there?
There really has been, Tom. I think, we looked at the trading yesterday and, the futures were indicating very, very weak yesterday. But as the trading went on through the day, the markets kind of digested what is out there. And I guess, as you mentioned, a lack of news maybe over the last 24 hours. And we're kind of seeing that in the markets getting kind of mixed here, futures in the morning.
Kevin Cirilli suggesting that will not be the case once Washington really begins its day, which is 1 minute, 44 seconds ago. It's a little different than New York, Paul.
It is, Tom.
They get going here in the 9 hour, and then they will move forward into an eventful evening. We'll keep you in touch with that. Don't forget, Kevin Cirilli. I heard Sound On with Kevin Cirilli on Bloomberg Radio in the 5 o'clock hour. Futures at -4, Dow futures -32. A churn of the market. I would note yen weaker through much of the day as well. Right now on the equity markets, our market drivers report, here's David Wilson. David, what do you have?
Well, Tom, we've seen some slippage, you might say, in chip stocks the last couple days. Today, you're getting a rebound. And one reason is what Microchip Technology had to say about its fiscal third quarter. The stock's up about 4% in early trading. Microchip's preliminary sales beat analysts' average estimate in a Bloomberg survey. And analysts said the results showed a chip industry slump has hit bottom. You've also got memory chip makers higher. Micron Technology up 3.5%. Western Digital up 3%. Both those stocks were raised the equivalent of buy from hold at Cowen. The firm cited a brighter outlook for two main categories of memory chips. We're talking DRAMs and NANDs. Tesla's up 1.5%. The electric car company made its first public deliveries of Model 3 sedans produced in China. CEO Elon Musk presided over a ceremony at Tesla's new multi-billion-dollar plant near Shanghai.
I saw some odd footage of him this morning doing a crazy kind of Steve Ballmer-like dance, but the stock's working.
It certainly is. You're talking about a record for Tesla shares. Not so much for Accenture, though. It's down 2%. The technology consulting firm agreed to buy a cybersecurity services business from Broadcom. Terms of the deal weren't disclosed. Now, Broadcom acquired the unit in a $10.7 billion takeover last year of the enterprise software division of Symantec, now known as NortonLifeLock, thanks to that sale. You've got payment processors rising after some analyst upgrades. PayPal's one of them. They're up 1.5%. PayPal raised the equivalent of buy from Holden Bernstein, and that upgrade followed the completion of a $4 billion takeover of online coupon site Honey Science. That was yesterday. Square's up 3%. The payment processor was raised to buy from neutral at Bank of America. Apache, one of the most active stocks in early trading, up 17.5%. The energy producer and France's Total found oil off the coast of the South American country of Suriname. And Apache CEO John Christman said in a statement that the field has, quote, the potential for prolific oil wells. So this has been waited on for a while. Oh, yeah, absolutely. And one more for you. Apellis Pharmaceuticals up 45%. The drug maker's proposed treatment for a rare form of anemia worked better than a medicine from Alexion Pharmaceuticals in a final stage study, and you've got Alexion shares down about 2.5% in early trading in response to those results.
Bloomberg Stocks editor Dave Wilson, thank you so much. A crazy story out on the Bloomberg terminal from our good friend Alex Ruoff, Bloomberg government reporter, on U.S. healthcare spending. A couple numbers that jumped out at me. U.S. spends $812 billion a year on filing healthcare paperwork. That number's huge, but that's about 1/3 of what Americans spend on healthcare in general. So, I mean, talk about overhead. Alex Ruoff joins us on the phone. Alex, thanks so much for joining us. The numbers there are just kind of mind-boggling. Has it always been that way, that paperwork is such a huge part of what Americans spend on healthcare every year?
I mean, for at least the past 20 years, yes. You know, as the healthcare system is getting more complex, as our, care expanded, and basically as we've gotten better at treating people, the way we pay for it's gotten much more complex. So, yeah, it's sort of a confluence of factors over the past 20, 30 years.
Can we just blame the insurance companies like we always like to do about lots of things healthcare?
A lot of the growth is partly to do with the shift we have of getting more private insurers into like Medicare and Medicaid. A lot of states, particularly states have, offloaded a lot of costs onto private insurers to say, look, we'll reward you for treating people better, for managed care plans. But, I mean, a lot of this comes just from the complexity of having all of these payers, from all this paperwork, from the system that's designed for a lot of fee-for-service systems. And mostly there's a lot of money to be made in this. There's a lot of companies out there that, take overhead and simplify systems for doctors. And doctors can just sort of raise their rates, and their life is a little simpler because someone else handles a lot of this complexity for them. So there's a lot of entrenched interests that, keep a lot of this working around. So it's not entirely on insurers, but they're a major player in it.
Is there a movement to kind of curtail this cost? Because when I hear about healthcare costs, I hear about drug costs and bringing down the cost of pharmaceuticals. I don't hear much about this overhead cost. In fact, your article is kind of the first time I really put the kind of in context for me. Is there a movement to kind of reduce these costs?
Well, there's a lot of discussion about it, but really there's not a great appetite among policymakers to jump on it. It's not a particular sexy topic. I will tell you one person that talks about this, and that's Bernie Sanders, who argues that, a single payer system would eliminate all of this, that you'd have no overhead if the government just took care of it. A lot of people would argue that that's going further than than most people want to go, but really for years and years, it's proven very difficult to get your hands around this problem. Some states have, Maryland has a system called the all-payer global payments. Essentially, it's at a ceiling, and it's on what people can charge. And apparently, it has made things a little simpler in the state. But, for the most part, private industry, takes a little bit for administrative costs. Some of that is salary for bureaucracy, and they have an interest in having that around. So it's a little complex, but yeah, there's been a lot of this, it's tough to get around for policymakers because it's hard to go home and say, look, I made it simpler for your insurer to set up a clearinghouse in the state. It's not necessarily an easy thing to get people to jump on board.
So when we think about, health care costs accelerate or growing every year, high single digits, some years it seems like it's double digits, low double digit growth in healthcare expenses. You hear about corporations talking about that as a big cost growth on their P&L. How much of that growth in overall healthcare costs is kind of just this overhead aspect as opposed to, say, the cost of treatments or the cost of pharmaceuticals?
So This overhead section, again, it's a third of all spending, and that's grown about 4% over the past 10 years. It's supposed to keep growing pretty high. So it'll basically become a larger section year over year. If you're an employer, your biggest concern is things like hospital, doctors' costs, what services cost, because those rise significantly year after year. Bureaucracy is kind of a big number because it seems like you could cut this, for paperwork, for overhead. This is the kind of stuff that when private equity comes in or when you have big hospital mergers, these are the kind of costs that people promise, big multi-million-dollar CEOs say, I can cut this down. We could take a big axe to this, simplify our systems, and churn out a better, more efficient, healthcare system. And for the most part, most people have failed at that. So it is an interesting slice of the pie that this seems like an easy thing to tackle, but a persistent problem. Whereas I think if you're a big employer, if you're Amazon and you want to jump on these, healthcare costs, they have said, well, we want to take out the price of it. We want to argue for cheaper prices. And that's also pretty hard. So just like everything in healthcare, it seems like a problem you can tackle. And year after year, we look back and find out that no one has perfected this. It's a very entrenched issue.
It just, I feel like I want to just go out to Palo Alto, to some garage out there, some smart Stanford or Berkeley kids, show me your article and say, guys and gals, just disrupt this industry, come up with some app or some technology that will fix this issue. Has there not been any, play in terms of disrupting kind of the payments of healthcare?
Well, George W. Bush said electronic health records would do it. And he had this big plan to, get everyone on health records. And the Obama administration, this is kind of, this is going back a little bit in history, but the Obama administration, as part of its stimulus package, passed up, we spent, I don't know if you guys know this, we spent about $30-some billion with a B dollars, paying hospitals and doctors to use electronic health records so that, all the billing systems could match up, all of our health records could move around seamlessly, you wouldn't have to get multiple tests, that you could learn from health system stuff. And I don't know if you've been to a doctor's office in a while, but you still send things by faxes. I mean, the uptake on these kind of systems of simplifying them has never taken off in a big way. So, yeah, I mean, there's a huge industry to it. If you talk about Epic or Cerner, these big companies, they promise to cut this,
If I were a younger person, tech savvy, I think I'd come up with some kind of app. Alex Roth, thanks so much for joining us. Alex Roth is a reporter for Bloomberg Government and Law, giving us some really interesting thoughts about kind of the overhead cost of healthcare. Right now, let's get world and national headlines with Michael Barr. Michael.
Thank you very much, Paul. The U.S. intelligence used to justify the killing of Iranian General Qasem Soleimani included plans to target American diplomats and service members stationed in the region. That's according to National Security Advisor Robert O'Brien, who spoke after more than 50 people died and 213 were injured in a stampede at the funeral for Soleimani. The tragedy unfolded as Iran served notice that it was assessing 13 scenarios for retaliation. Defense Secretary Mark Esper has been working to douse an international outcry by ruling out military attacks on cultural sites in Iran if the conflict with Tehran escalates further. This after President Trump threatened to destroy some of the country's treasured icons. Iran's Foreign Affairs Minister Javad Zarif says President Trump's threat shows a level of arrogance and ignorance.
He is showing to the international community that he has no respect for international law, that he is prepared to commit war crimes because attacking cultural sites is a war crime. In this disproportionate response is a war crime. But he doesn't care, it seems, about international law. But has he made U.S. more secure?
Over 200 bushfires are raging across southeast Australia. Firefighters are exhausted. This woman lost her home.
This is the risk you have when you're in the bush, and this is Australia. We will reassess what we do from here, and this will still be home. We've got more things than what some people have got, and we've got to be thankful for that.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Paul.
Michael Barr, thank you so much. We have a mixed futures market here. S&P down 3, Dow down 26, NASDAQ up 14. This is Bloomberg Surveillance.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversations from Bloomberg Television. Here's Taylor Riggs.
Alphabet was upgraded to a buy from a hold at Pivotal Research. Analyst Michael Levine wrote that after a critical foundation year in 2019, the narrative continues to improve in 2020 and beyond. So Michael Levine, he joins us now. Michael, give me your take. How do we get from a 1397 to a 1650 on the stock?
I think one of the things that was most compelling to us, Taylor, was both the change in regime with Sundar basically stepping in as CEO and chairman, but something that I think a lot of investors may have missed. His compensation agreement was filed with the SEC on December 20th, and what struck us most compellingly was he basically is compensated on the percentage differential that Google stock does relative to the S&P 100. And he's basically got a $45 million tranche on plan for stock performance in 2021, a second $45 million for 20 through 22. So it's pretty refreshing and encouraging to see alignment between management and stock performance from a company that has just historically taken a very different approach to working with the street.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. futures, they are a little changed this morning. S&P futures now edging a bit lower. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures, they're down almost 4 points, down about 0.1%. Dow futures down 31, and NASDAQ futures still higher, up 13. The DAX in Germany's up 0.6%. 10-year Treasury, little change, yield 1.80%, and the yield on the 2-year 1.53%. NYMEX crude oil is down 1% or 65 cents at 62.63 a barrel. COMEX gold, little changed at 15.6920 an ounce. The euro 1.1160 against the dollar. British pound 1.3126. And the yen is at 108.44. The U.S. trade gap narrowed in November to the smallest in 3 years as exports advanced amid a thaw in the trade war with China, while imports fell to the lowest since 2017. That's a Bloomberg Business Flash. Tom and Paul.
Karen Moscow, thank you so much. We appreciate that. Looking at this renewed geopolitical risk we've been experiencing over the last several days have certainly impacted financial markets, including commodity markets. When we talk about commodities, nobody better to chat with than Mike McGlone from Bloomberg Intelligence, covers all things on the commodity space. Mike, thanks so much for joining us here in our Bloomberg Interactive Brokers studio. let's start with gold here. I'm looking, gold up over $1,500 an ounce, $1,569 an ounce, up slightly again today. What's your call on gold?
Higher.
All right, that's it. Actually, you've been saying that for
too long.
For a long time, and it's been a great call, by the way.
I appreciate you remembering because I get a lot of them wrong. But as a commodity guy, you're inherently bullish. And unfortunately, gold is the only true commodity I can really feel confident about being more bullish about. And that is the macro situation for gold is very positive. First of all, fundamentally, we had a 5-year consolidation, almost maximum loss of faith period. Last year, finally broke out. And remember, we're at bottom the day the Fed first tightened in December 2015. It was looking forward, and it really broke above $1,400 an ounce last year when the Fed first eased. So now the Fed's easing. Maybe they won't ease anymore, but it's the global macro. Gold in terms of the euro has made new highs, in the British pound new highs, and Canadian loonie new highs, Indian rupee new highs. To me, it's just a matter of time for the dollar. And it's a question of what it's going to take for gold to go down. The key things to make gold to really take off is if the dollar peaks. Now, the dollar is still very strong. The trade weighted is all-time highs. But bottom line is we get a little pickup, a continued pickup in stock market volatility. That would really launch gold. And I'm afraid that's what might be happening this year.
Is there a bear case for the dollar?
Yeah, exactly. There is. We've discussed this a lot, and it's everybody's so bullish. But what I'm concerned about is the key thing I'm worried about the dollar is in the Fed's easing, and still the dollar was kind of languishing last year. It was down in Q4. But the trade-weighted broad measure is you have to expect the rest of the world to really take off, most notably Europe economically, China economically, and U.S. to pull back. And that's unlikely. Now that's U.S., one thing what U.S. has done is put a bit of a kibosh on that you can export to the U.S. indiscriminately and have it run in trade surplus. And that's just not happening anymore. Look what happened in Germany, 23-year low in auto sales and auto production. I mean, is that going to just turn around? And I suspect it's unlikely.
Interesting. Okay, so long gold, which has been consistent. I can't remember the first time I read your research about that, a couple of years ago, maybe. Let's talk about crude. We've seen some volatility re-inject itself into the crude markets following some of this geopolitical issues coming out of Iran and Iraq. What's your oil call?
Sell.
Okay. So gold we're buy, oil we're selling.
And it's been a thing for quite a while. The thing for crude oil, I'm going to go and battle the charts today if it's not canceled. And I'm going to point out the bear trend in crude oil. It's oversupplied. And look what happened in the last 10 years.
Now, when you say oversupplied, are we talking just shale or just kind of there's a global oversupply? Okay.
Globally. And look at demand. Demand has been decreasing incrementally for 10 years, most notably in the U.S. The U.S. is now a net exporter of liquid fuels. 10 years ago, we imported 50% of our total liquid fuels needs. So that's a paradigm shift. And what's going to take for that to change in the next 5 to 10 years? You need more what happened the last few weeks and what happened in September. Geopolitical issues and some form of sustained supply disruptions out of the Middle East. Without that, the path of least resistance for crude oil and liquid fuels is down. And one key thing that we should look forward to is decarbonization. That's only going to pick up.
All right. So when I think about oil, obviously supply and demand, I've learned enough reading your research and the research from BI's energy team, supply and demand. I have to have my sense there. But it seems to me that demand has really been driving oil prices. And whenever we get a trade tensions, oil comes down. We get a sense of trade easing and global maybe growth will pick up. Oil picks up a little bit. Is it simply you have to get demand right?
Yeah. For any sustainable bull trend in commodities, you need demand to lead typically. And here's a fact for you. U.S. liquid fuel demand is unchanged from 20 years ago. That's never happened in modern history. Why? We don't use as much anymore, and we're much more efficient. I drive an electric car. I have solar panels. Where's that going? And that's the U.S. We're leading, but look at Europe's going that way too. And then we have emerging markets. They're just leapfrogging in the technology. You just don't. We still burn 100 million barrels a day, but our incremental demand is nowhere near what it was as far as a beta versus GDP. It's just declining.
All right, we gave Tom Keene a couple-minute break here this morning, so that means we can talk Bitcoin. I'm looking at the chart here in kind of our trailing 12 months. Gosh, we started down around 4,000. This currency thing, Bitcoin thing, got up to over 12,000 there towards the end of June, and here we are back down around 7,800. What's going on with Bitcoin?
It's going higher. The key thing to remember about Bitcoin is there's only one thing that matters, and that's adoption. So here's a simple fact. The supply is not only limited, it's going to stop. There's only 16% more it's ever going to go up in Bitcoin. It's 21 million. We're right now at 18.1. So the only thing that matters is adoption, and it's winning that race. So that's what's happening. That's my key point. It has to go backwards in terms of adoption, and it's not. It's just winning. So I published my outlook today, and I think those key levels are the ones to watch for last year. The bell curve, last year's high was around 14,000, low was around 3,000. I don't think we break out of that range, but we migrate towards the upper end.
All right, so we know that Tom is triple leverage cash, Tom, so I think you just roll it all into Bitcoin.
You think it goes into BitDog? I don't know. Mike, help me here with the criminal nature of the use of Bitcoin. Every time a nation trots out some constraint on these currencies and these means of transaction, the thing craters. Why can't that happen again?
It can and it will, and that's the unpredictable nature of it. But that's a key factor. I'm obviously not an advocate of any kind of criminality, but it shows the world is going cashless. And this is a way to be just digital currency. It's just winning. Now, like, Paul, you just pull out some. I don't use cash anymore except if I have to.
No, but I use Visa and I get frequent flyer miles. And when Afterthought uses the Visa, it's Sephora, I get frequent flyer miles.
Agreed. I do too. But the rest of the world doesn't have that option. And I also look at it from an investor standpoint. They see this as, I think, similar to gold. It has to fail. Well, what if it does continue to win? It has been winning for 10 years. The next 10 years, why not be part of it? And I think that's what investors are doing. Is one thing that Satoshi Nakamoto got wrong. It's not a good peer-to-peer cash, but it's a good store of value, at least from a digital standpoint.
Mike McGlone, thanks so much. Mike McGlone covers all things commodity, including Bitcoin for Bloomberg Intelligence. He joins us here on our Bloomberg Interactive Broker Studio. So I think if I can summarize, Mike, buy gold, sell oil, buy Bitcoin. I think I've got that right, Tom. So, I mean, that's kind of how we do it here. So looking at the futures here, slightly lower. S&P down 4. This is Bloomberg.
Imagine being denied an apartment because of your religion or your race or because you have children or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC. This is a Bloom.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
You're listening to the sound of a Halifax customer who used to worry she wasn't saving enough, but is now saving the change every time she runs out of milk. Switch on Save the Change, and when you use your Halifax Visa debit card, we'll round up to the nearest pound and put the difference into your chosen Halifax savings account.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
And BloombergRadio.com. This is Bloomberg Surveillance.
And good morning. I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And Bloomberg Surveillance brought to you by SEI. With a 50-year history of innovation, SEI's outsourced solutions help achieve lasting success for investment managers, asset owners, private banks, and independent advisors. Learn more at SEIC.com. Right now, the S&P 500 is lower at the open, down 0.2% or 7 points at 3238. The Dow Jones Industrial Average down 0.3% or 84 points to 28,617. The Nasdaq little change down 2 to 9069. 10-year Treasury little change, yield 1.80%. The yield on the 2-year 1.54%. NYMEX crude oil down 1.2% or 74 cents at 62.53 a barrel. COMEX gold up less than 0.1%, up $1 to 15.6980 an ounce. The euro 1.1158 against the dollar. The yen is at 108.45. Tom and Paul.
Karen Moscow, thank you so much. Barry Ritholtz, Bloomberg opinion columnist and podcast owner of Masters in Business in our Bloomberg Interactive Broker Studio. And he also has a fantastic column came out yesterday with some more Barry Ritholtz valuable investing lessons. And it has to do with somebody who bought some Bear Stearns stock back in the day, hoping that Jamie Dimon would bail them out. It didn't really work out that way, Barry, for this investor. Tell us what happened.
Sure. So, fascinating story that I wouldn't have noticed, except it was Christmas Day in the Wall Street Journal, and I see a headline, 11 years in the making, breaking even on the purchase of Bear Stearns. And it tells the story of a broker who took a flyer when Bear Stearns was in the middle of its epic collapse from about $170 on its way, at least heading towards bankruptcy. It had collapsed down to $30 that Friday back in 2008 and March 2008. And so the person bought a slug of stock and was waiting for good news over the weekend that there would be a takeout over at a premium. What ended up happening is looked like Bear Stearns was going to zero, and Jamie Dimon came in, and really what they ended up getting was the new headquarters, which is now a beautiful building that J.P. Morgan owns. But instead, they said, we'll take it off the Fed's hands for $2 a share, and you have to backstop $29 billion worth of bad paper. There was such an outcry that it was raised to $10, but it was still a terrible trade if you bought it at third. I'm reminded of the very funny quip by, I believe it was David Einhorn, who said a stock that's down 90% is really a stock that's down 80%, and then it gets cut in half again. And so just because something has collapsed doesn't mean it can't really fall a whole lot further.
So in your column, you then said, boy, this is interesting. What was the psychology behind holding a stock for 10 years? And you went out and chatted with some people who know a thing or two about investing.
Right. 4,209 days till break even. And, you know, at a certain point, I think the reading audience does not want to see me get up on my soapbox and pontificate yet again about a specific bad trade. So rather than do that, I reached out to some of the savviest traders and fund managers I know, people like John Roque and Howard Marks, and go down the list, Peter Maluk and Eddie Elfenbein and J.C. Parrots, and said, you guys are traders and technicians and fund managers. Look at this example of waiting 10 years to get break even. What sort of lessons can the rest of us learn from that? And they were really incredibly insightful, filled with not specific to Bear Stearns, but here are the broad lessons we all can learn.
Barry, this is one of the best things you've done in years. I hate to say that. You know, you can barely, Paul can barely get his head through the door. He's so blown up. But this is a superb effort. And I love the eclectic group of people you talk to. Folks, this is the Ritholtz magic. To have Howard Marks mentioned in the same breath with John Roque says everything about Barry's career. Barry, this is real simple. This was like a vanity trade. Oh, I lost a little money. Great. He had a lot of company. I get that and all that. The real issue is we've got people with real money and their real futures lined up who have either gone down big and never gotten back in, or they've just mediocrely missed this bull market. If it's big money, not like, it's like some vanity trade in Bear Stearns. If it's big money, what do you do right now to catch up after this bull market that we've seen?
So based on a lot of the advice that was given by the traders and fund managers I spoke to, a lot of this comes back to just a very simple understanding that you have to own your own errors. You have to recognize that perhaps your process is fallible. And when you can begin to identify these errors, you have to take steps to correct them, to stay in a state of denial, to allow your ego to avoid admitting a mistake. Just means that it's not that one trade. You're going to repeat that error over and over again. So the first step to fixing your portfolio is recognizing, hey, I'm doing this wrong. Let me at least stop shooting myself in the foot first, and then let's put together a proper portfolio and understand how markets work, but more importantly, how human behavior gets in the way. It doesn't matter if you're an individual investor or an institution. Institutions are filled with humans who make all the same emotional, cognitive errors that we all are suspect to.
And Paul Sweeney, what's so important here, and I'll get a little technical, folks, is within the reality of finance, which is not a bell curve like your high school height class, height of all the kids in your class in high school, but if it's log normal, it's so much harder mathematically to find the link between behavior and courage and action when you're going down. It's mathematically a lot more difficult.
Sure, the emotions take over.
You got to have a setup, Paul.
Yep.
To know it's gonna happen, and you got to have a setup to know what to do when the gonna happen happens.
Hey Barry, I love that you reached out to Nicholas Kolas. He's co-founder of Data Trek Research. He's one of the smarter folks I think that we have on Bloomberg Radio when he comes on, and I love his thing, which is don't fight the tape. That's probably one of the first lessons I learned on Wall Street. Don't fight the tape. Don't buy the new lows. Don't short the new highs. That's tough to do, particularly when you're looking at Bear Stearns coming down from 170 to 30. You're figuring, hey, how much lower can it go?
Well, the answer is 100%. Or in that case, it could go another 98% down to $2, 94%. Look, market momentum is a really, really serious force in investing. And when you're selling a new high or buying a new low, what you're effectively saying is, I am smarter than the collective intelligence of the entire marketplace and all of the really, really smart people who are traders and fund managers and quants and analysts. And if you stop and talk about head being swollen, that's a really arrogant trade to say, everybody else is an idiot and I'm the only one who gets this. And that's what don't fight the tape means is, most of the time, the market gets it right, or at least the trend gets it right, and catching that exact moment when the trend reverses, very, very difficult.
Yeah, Paul, this is stochastic versus trend-based analysis, and John Roque is wonderful at this. I'd also mention Chris Verone over at Strategas, who's the same basic theory, and the giant Luis Yamada, who is just superb at this. And Paul, it's just trying to not be a hero and make the call. And I would suggest, Barry, the only way to learn that maxim is to, and I've used this phrase in speeches, to enjoy losing money. You have to practice. You have to practice losing money to learn how to do this. The idea that you're born able to do this is hogwash.
Right. The tuition of becoming a good trader is the cost of being a bad trader. And it takes a while to make mistakes. The secret of longevity is to contain your mistakes and make small errors, keep them manageable, so it's not a fatal existential crisis that knocks you out of the industry. We've seen that happen time and again with a lot of people. If you think you're smarter than everybody, and if you think you're smarter than the market, eventually we find out if that's true, and most of the time you're not. The market is smarter.
Quickly here, do you have a place for technical analysis in all that you do?
Of course. If you ask people randomly who are thinking about buying a given stock or a given market, hey, if I can only give you one piece of data to look at, which would you take? A chart or an analyst research piece? I think most people would take the chart. They want to visually see it. And you'll note that some of the technicians I reference, in this case, John Roque and J.C. Parrots, and to a lesser degree, Nicholas Colas is semi-technical. They all bring in a multidisciplinary approach where they're not just looking at charts, but they're looking at data and they're looking at quantitative metrics and they're considering how markets interrelate. They're trying to get both the granular boots on the ground view of that specific stock and then the broader context of, hey, what's going on in the market with this sector? What's going on with the overall direction of the way things are moving? If you ignore that, you could buy a really nice house in a really bad neighborhood. My favorite technicians all say, you want to buy a house that's in a good neighborhood. You want to buy a stock that's in a good sector that's going in the right direction, just to put the wind at your back. And a lot of technicians focus on that because it's so helpful.
Did this person sell their JP Morgan?
It didn't say if they ended up selling it now that they're at break even. Yeah. But, one of the things that fund managers like Eddie Elfenbein mentioned is instead of waiting for break even, forget about that. That money is lost. And Howard Marks emphasized it. Mental accounting, that sunk cost fallacy, that money is gone. You need to look at each holding as if it's cash. And if you were sitting in cash, would you buy that holding today? Or would you buy something else that, for whatever reasons, are more attractive? Every position in your portfolio, if you're trading individual stocks, is something that has an opportunity cost because you're not buying something else.
Great advice. Great column. I really suggest people take a really... Yeah, you're right, Tom. Let's not go overboard. You can check that out at Bloomberg.com/opinion. You can go to OPIN Go on the Bloomberg terminal to see Barry's opinion, columns, as well as all of the stuff coming out of Bloomberg Opinion. Great stuff. Barry Ritholtz, Bloomberg Opinion columnist. He's going to be coming back, I think. I think we're going to make him work a little bit harder. Right now, let's get world and national headlines with Michael Barr. Michael.
Thank you very much, Paul. Iranian Foreign Minister Mohammad Javad Zarif says the killing of a top Iranian general by the U.S. was an act of state terrorism, and Iran will respond proportionately. Independent Senator Angus King says the attack ordered by the Trump administration has likely put the U.S. in a worse position, creating opportunity for Russia and other foreign actors.
Certainly people, Americans in the Middle East, cannot feel safer today than they did this time last week. The list goes on and on. We just heard this morning that Russia is graciously offering to step in to Iraq, and we're talking about the possibility of the Iraqis expelling us.
Close to 200 fires continue to burn in Australia. At least 25 people have died in the fires. More than 14 million acres have burned, fueled in part by Australia's driest and hottest year on record. Firefighter Clint Bradley is overwhelmed by all the devastation.
I get a lump in my throat sometimes with seeing people who come and have to confront this.
The first hints of the financial toll from the disaster are emerging, with the Insurance Council of Australia saying the estimated damage bill has reached the equivalent of $485 million. Puerto Rico is still recovering from Hurricane Maria and now dealing with a series of increasingly powerful earthquakes in the last 24 hours. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Time.
Michael, thanks so much. Some tension to the tape here after what we saw in futures. A negative 114 on the Dow. SPX down 12 points. The VIX 14.33. Stay with us. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. If you're one of the 4.7 billion people expected to travel this year, you might want to look west. The world's safest and most punctual airlines are in the Asia-Pacific region. Qantas Airways was named safest airline in the world by AirlineRatings.com, followed by Air New Zealand and Taiwan's Ava Airways. In a separate survey by OAG Aviation Worldwide, PT Garuda Indonesia was crowned 2019's most punctual carrier. Peering into her crystal glass, Bloomberg's wine critic Ellen McCoy sees big things to come for wine in 2020. Global warming and experiments with new grapes will be of top importance, while the fruits of a one-year mission to age wine in space will finally be tasted. Unfussy Piquette, a low-cost, low-alcohol, slightly fizzy beverage made from fermenting the leftover skins, seeds, and stems of grapes, will come into vogue, as will so-called health-focused wines. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than...
Here at Tesco, we're celebrating over 100 years of great value, with even more great prices that take you back. Like a 500-gram tub of Anchor Salted Spreadable from £3.50 to just £2. All this week at Tesco.
Selected larger stores, subject to availability. Offer ends 14th of January.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Pascal gobbles up the rebound and slams it down. Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks are lower as investors remain wary of an escalation in tensions with Iran. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P 500 down 0.4% or 13 points at 3232. The Dow Jones Industrial Average down about 0.5% or 130 points at 28,574. And the Nasdaq's down 0.3% or 28 points at 9042. The 10-year Treasury up 4/32, the yield 1.79%, and the yield on the 2-year 1.53%. NYMEX crude oil up 1% or 63 cents Actually, NYMEX crude oil lower. It's down 1% or 63 cents at 62.64 a barrel. And COMEX gold is up 0.3% or $4.10 at 15.72.90 an ounce. The euro, 1.1155 against the dollar. The yen at 108.33. Watching shares of Apache, they're up 18.5% after the U.S. Explorer and partner Total announced a significant discovery off the northeast coast of South America, where several companies have already made big oil finds. And the U.S. trade gap narrowed in November to the smallest in 3 years as exports advanced amid a thaw in the trade war with China, while imports fell to the lowest since 2017. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. We appreciate that. Looking at the market here, another risk-off day today. Geopolitical tensions just on the fringe, I think, of traders' minds here as we think about starting off the new year. Barry Ritholtz is still with us here in our Bloomberg Interactive Broker Studio. He's a Bloomberg opinion columnist, of course, and Ritholtz Capital Management, and he's got a podcast. He does a million different things. Barry, while we've got you here, just in taking a look at geopolitical risk, it's something that this market has had to kind of start to discount a little bit more than maybe it had to in 2019. How do you think about geopolitical risk as you put your portfolio together and think about what you're buying and selling? Is this anything you can manage, really?
The easiest way to think about it is just to recognize that it is a permanent background noise, and there's really very, very little you can do about it. You can't anticipate when events are going to change, whether it's a trade deal, January 15th?
Yep.
Do we really believe that's going to get signed? This is like the 87th time.
Well, supposedly they're coming to Washington.
All right, so let's hope this time 87 is the charm. The same thing with war, the same with terrorist attacks, the same with geopolitical tensions. Not only can't you predict when they're going to happen, even if you know when they're going to happen, you can't predict what the result is. Think back to the 2003 Iraq war. The market had made a bottom in October 2002, especially all the beaten up technology stocks. It had rallied, and then in anticipation of, we literally knew the start date. We had a strong set of suggestions from the White House when the Iraq war was going to begin. We saw the carrier groups moving into place, all the troops were moving into place. The day the war started in 2003, the market took off and didn't look back for the next 6-7 years. So even if you had a crystal ball to see when these events would occur, it's still difficult to tell what the market reaction is.
So if you came into the year with a bullish call in the market, you take market action like this as a buy on the weakness kind of. Here are the names I've liked going into the year. I can get them a little bit cheaper here.
So I like to step back and take the 30,000-foot view. And if you come into 2020 having enjoyed a giant 30+% gain in the S&P, forget all the geopolitical events. If I said, hey, markets had a monster move last year, maybe they take a couple of months or a quarter to just consolidate those gains, let earnings catch up to prices, and then things will start resuming upwards. I think most people would be thrilled to take that trade. Hey, plus 30% and a little bit of sideways action, up, down for a couple of months. I don't know if this lasts for days, weeks, months, but given that giant set of gains we saw in 2019, hey, a little consolidation makes some sense.
Barry, have we forgotten what a correction is? I mean, granted, there's been, tangential tensions with Iran and Iraq. We don't want to make light of that, particularly what we saw in Tehran today with 32 or, as a reported, 35 deaths as well. But, Barry, the markets are stunningly resilient. We've just simply forgotten what a 10% correction is, haven't we?
Well, you need a memory long enough to go back, all the way back to the fourth quarter of 2018, where practically from the first day of the quarter in October straight to Christmas, we were down 20%. That is more than a run-of-the-mill correction. Some people think of that as a bear market.
Did you?
To trough. And so, you have to have a memory that goes a full 13 months to see a major correction.
So one of the things I think about this market here is I think about 2019 and, again, the great performance we saw in the markets. I didn't see much earnings growth. Do we have to have earnings growth for another leg up in this market? Because valuations have to be stretched here a little bit.
So look at the period encompassing 1982 to 2000. You had a reasonable amount of earnings growth during that practically 1,000% rally in markets, bull market run. But when you break down the earnings growth versus the multiple expansion, turns out that about 3/4 of the gain in that secular bull market were attributed to earnings multiple, meaning investors were increasingly willing to pay more and more for a dollar of earnings. Now, it's not a straight line. It isn't just suddenly earnings are $10 and then it's 12 PE and then 14 and then 16. It sort of moves up in a stair-step basis. So prices will run up for a bit. Earnings will catch up. What was the rate of growth in earnings last year? It fell about 8%. It was still growing, but at a much, much slower rate. Sometimes we get ahead of ourselves. If the economy stays robust, and there are pockets of weakness, but overall, like manufacturing, really in a recession, industrial manufacturing. But when we look overall at the state of the economy, it seems pretty supportive of further earnings gains. Maybe not at a very robust rate, but it should continue, and maybe that lets the market catch up. I'm just guessing.
Barry Ritholtz, thank you. So I like that. That's a good title for your next column. I'm just guessing. Barry Ritholtz with us, and we should point out his podcast of immense value writing for Bloomberg Opinion. Paul, what'd you learn from the Golden Globes? I mean, it's sort of like the media kickoff of the year. They've got this chiseled now in the calendar perfectly. I think some of the nominees, the movies are barely out right now.
Yeah, it's interesting. I wasn't even aware that World War I, which won for Best Picture, was even out yet. So, yeah. I mean, I guess they as long as you get it out there a couple days beforehand, it's good to go.
Is that the Hollywood
Oh no, it's it's all about the streaming services, and it's not so much what is your opening box office weekend, although that's still important for a lot of companies. But the balance of power has shifted to kind of the streaming companies, because that's simply where the money is, Tom. The big checkbooks are coming from the Netflix of the world, the Hulus of the world. So different, but it was a fun broadcast.
It was a fun broadcast, but I mean, Disney really can't stand up and say thank you, can they?
No, it's interesting. I think Disney still kills it at the box office, but the future of their company is really going to be their streaming business, and so they've certainly got to play there.
This has been wonderful. Thank you so much, Paul Sweeney, the Bloomberg Interactive Broker Studios in New York. I'm Tom Keene in Washington. Please stay tuned later this morning. Alan Green.
Commonwealth Financial Network, #1 in independent advisor satisfaction among.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Here at Tesco, we're celebrating over 100 years of great value, with even more great prices that take you back. Like a 500-gram tub of Anchor Salted Spreadable from £3.50 to just £2. All this week at Tesco.
Selected larger stores, subject to availability. Offer ends 14th of January.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
Pascal gobbles up the rebound and slams it down. Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Did Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Hand off Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league. Hear every play of the NFL playoffs live with the NFL on TuneIn Premium. The divisional round kicks off Saturday at 4:35 p.m. Eastern when the Vikings travel cross country to take on the 49ers in an NFC showdown in Santa Clara. The action continues at 8:15 as the Ravens host the Tennessee Titans in Baltimore. On Sunday, listen live beginning at 3:05 Eastern as the Texans and Chiefs square off in Kansas City, followed by the Seahawks and Packers at 6:40 in Green Bay. The excitement of the NFL playoffs is on TuneIn Premium. Upgrade today.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. Coming up, we're going to be hearing from U.S. Secretary of State Michael Pompeo on the latest on the U.S.-Iranian issues and how the Iranian government has threatened some potentially catastrophic consequences to the U.S. action. We will take those live in just moments. Plus, we'll take a look at the risk-off feel that appears to be permeating markets. Right now, though, let's head over to our own Karen Moscow for a look at those numbers.
All right, Lisa, thank you. Yeah, we do have some breaking economic news right now. A rebound in sales and production lifting a gauge of U.S. service activity to a 4-month high in December, indicating the broader economy remains stable in the face of further deterioration in manufacturing. The Institute for Supply Management's non-manufacturing index climbed to 55, exceeding the median projection in a Bloomberg survey of economists from 53.9 a month earlier. A measure of business activity, which parallels the group's index of factory production, jumped 5.6 points to 57.2 from the lowest level since 2010. Meanwhile, stocks are lower. Investors are wary of that escalation in tensions with Iran. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 down 0.3% or 9 points at 3237. The Dow Jones Industrial Average down 0.3% or 85 points to 28,620. And the Nasdaq is down about 0.1%, down 7 points to 9064. 10-year Treasury down 1/32 yield 1.81%. The yield on the 2-year 1.54%. NYMEX crude oils down 0.7% or 47 cents at 62.80 a barrel. COMEX gold little changed at 15.6920 an ounce. The euro 1.1145 against the dollar, and the yen is at 108.48. And that's a Bloomberg Business Flash. Lisa and Paul.
Karen Moscow, thank you so much. We appreciate that. We are awaiting comments from Secretary of State Michael Pompeo. We will bring them to you live in moments. It is a risk-off feel to the market today, perhaps reflecting those heightened tensions between the U.S. And Iran. Let's get a sense of where the action is. Bloomberg Stocks Editor Dave Wilson joins us here in our Bloomberg Interactive Broker Studio. Dave, what are you looking at this morning?
Well, I mean, there are a number of sort of bits and pieces to this puzzle. You look at oil being down, you see energy stocks are among the worst performers on the day in the S&P 500 after having had some gains the last couple of days when you saw crude run up in response, to the issues in the Middle East. So, that's one thing that kind of jumps out. You know what else does? I mean, tech stocks are actually hanging in there. We were talking the other day about how the semiconductor makers, weren't looking so great. Their shares were backing off today. it's a different story. And you got a couple of reasons for that. One is this company, Microchip Technology, came out with preliminary sales for their fiscal third quarter that actually beat analyst estimates, at least the ones we surveyed here at Bloomberg. So now you've got the analysts talking about that particular figure as a sign that the weakness in the chip industry may be ending. I mean, and let's face it, you know, when you look at how well the stocks have done lately, going back to last year, I mean, it's kind of predicated on a recovery. So now it looks like, at least from the analyst perspective, that's starting to happen. And now you got memory chip makers up. Cowen raised its ratings on Micron Technology and Western Digital to the equivalent of buy from hold. And they're talking about a brighter outlook for a couple of the main categories of chips. And so what you get out of that is Micron up almost 6% on the day, Western Digital up 4.5%. So moves like that certainly jump out on a day when stocks overall aren't doing so well.
You know, just to sort of talk about the tech strength, we are seeing the NASDAQ outperforming the other indexes, but still lower after being higher ahead of the open. We're seeing the Dow lead the declines, but the Dow and S&P both down about 0.3%. We are awaiting comments from U.S. Secretary of State Mike Pompeo on the latest between the U.S. and Iran, the escalating tensions there. Can you give us a sense of the flip in stocks this morning? Can you give a sense of what's sort of tipping the balance one way or another when it comes to the optimism or pessimism? And I should just say Mike Pompeo is coming to the podium, about to start speaking. But just real quick.
I'll just tell you, I mean, you're not seeing a whole lot of direction, basically, and that's more of the same in that regard.
Let's see if we can get some direction. Let's listen in to Michael Pompeo.
Early this week, leaving a lovely wife and a family. Wanted to express my condolences to him. His service to America was noble. As a member of Congress, we worked together on pro-life issues during my time in Congress. I know lots of you have questions about the Middle East and Iraq. I'll certainly take some questions today. But first, too, I want to offer my condolences to the people of Australia for the tragic loss of life and property caused by the devastating wildfires across that region. America's thoughts and prayers are with the victims, their families, and the emergency service personnel putting themselves in harm's way. And the same goes, too, for the dozens of U.S. firefighting personnel who are standing side by side with our Australian friends fighting the flames together. As I said when I was in Sydney just this past summer, we have a truly unbreakable alliance. They are great friends, and we're happy to be able to help the Aussies in this time of need. Staying in Asia, we noted the appointment of Liu Weining as the new head of the Hong Kong Chinese Central Government Liaison Office. He's expressed hopes that Hong Kong will return to the, quote, right path, end of quote. The right path, as I've said before, is for the Chinese Communist Party to honor its commitments made to Hong Kong in the Sino-British Joint Declaration filed at the United Nations, a commitment that guarantees the territory's independent rule of law and freedoms that the Chinese living on the mainland, unfortunately, do not enjoy. The United States will continue to work with Hong Kong and the Chinese Communist Party officials to protect human rights and fundamental freedoms in Hong Kong and to promote Hong Kong's high degree of autonomy. In Afghanistan, there's an aspect of that conflict that deserves more attention, and that is the Islamic Republic of Iran's involvement there. Iran has refused to join the regional and international consensus for peace, and is, in fact, today, actively working to undermine the peace process by continuing its long global efforts to support militant groups there. Most people know about Iran's proxy networks in the Arab world, but the regime also has a relationship with the Taliban and related groups, such as the Haqqanis, the Tora Bora, and the Mullah Dadullah group. The Taliban's entanglement in Iran's dirty work will only harm the Afghanistan peace process. A couple of items here in the hemisphere. In Venezuela, I want to thank and congratulate Juan Guaido on his re-election as the president of Venezuelan National Assembly, a legitimate re-election by a quorum of 100 deputies. The Maduro regime's campaign of arrests, intimidation, and bribery could not derail Venezuelan democracy, nor could its use of military forces to physically bar the National Assembly from accessing the Parliament building. I applaud how Venezuela's political parties came together to support Guaido's re-election. The United States will continue to support President Guaido and the Venezuelan people, and we will continue to rally all other freedom-loving nations across the globe to do that same thing. We support the Venezuelan people because we believe the Western Hemisphere should be a hemisphere with freedom everywhere. I also want to highlight the work of the OAS, which has been an instrumental tool in moving the region in that direction. It's an example of truly outstanding, effective multilateralism. Secretary General Luis Almagro is the leader we need for the OAS to continue proactively addressing the central challenges facing the region, promoting democracy, upholding human rights, advancing security, and fostering economic development throughout it. I have more to say about the OAS and the multilateral reform in the coming weeks. On the theme of basic freedoms, I want to commend members of Bahrain's Council of Representatives for their January 2nd statement, in which they expressed deep concern over the inhumane and painful conditions to which Uyghur Muslims in China are subjected. Bahrain is recognizing what I've been saying for months. The Chinese Communist Party is committing mass human rights violations and abuses against Uyghurs, ethnic Kazakhs, Kyrgyz, and other Muslims held in detention in Xinjiang. We're happy with what Bahrain did, and we ask all countries, particularly those belonging to the Organization of Islamic Cooperation and the Arab League, to denounce the Chinese Communist Party's brutal treatment of Uyghurs, which is part of the party's broader war on faith. Moving to Europe. As many of you know, Prime Minister Mitsotakis is in town this week. I'm looking forward to welcoming him here. I'll be with him today at the White House alongside President Trump. I also want to announce that our Undersecretary for Political Affairs, David Hale, will be traveling to Brussels later this week, where we'll have conversations with 28 European counterparts. This is a recurring meeting that happens about every 6 months. This particular gathering is important because it immediately precedes an EU foreign ministerial on Iran that has just been scheduled. And it shows, too, once again, our close cooperation with our European partners on issues of mutual concern. I'm sure while David's there, the issue of Iran and Iraq will feature prominently in their conversations, and they'll have an opportunity also to discuss priorities such as Syria, North Korea, and China as well. Finally, one more personnel matter. I want to thank Ambassador John Bass, who I've come to know in my time in service, both as the Director of the Central Intelligence Agency and now as Secretary of State. His 2-year tour of service in Kabul was remarkable. That's one of our most important missions. Ambassador Bass is a respected strategic thinker, a man of incredible integrity. He's helped that country move forward to a brighter, more peaceful, and more secure future for all the Afghan people. And I, too, want to welcome our new 11 ambassadors and 2 ambassadors at large who were confirmed since the end of November, including Ambassador Sullivan, who will be heading off to Russia before too long. Glad they're finally getting out to the field, and we hope to have more follow them out there. With that, I'm happy to take a few questions.
Matt.
Thank you. Happy New Year, Mr. Secretary.
Hello, Matt.
And in honor of the new year, I have exactly 2,020 questions to ask you, but I'll pare them down for the sake of brevity. One is there continue to be questions about the nature of the intelligence that led to the strike that killed General Soleimani. Can you be at all more specific about, how imminent this was, what exactly it was? Secondly, why not allow Foreign Minister Zarif to come to the UN to speak at the Security Council? And then lastly, did the situation in Iran have anything contribute at all to your decision not to run for the Senate from Kansas? Thanks.
Thank you. Last one's easy. I said the same thing yesterday that I said for months. No real news there. I said that I'm going to stay serving Secretary of State so long as President Trump shall have me. No. You can accuse me of being inconsistent otherwise, but not on that one. Second, we don't comment on visa matters, those traveling here to the United States on visa, so I can't add much more to this issue of Foreign Minister Zarif's travel to the United States. I'll say only this. We will always comply with our obligations under the UN requirements and the headquarters agreement, and we will do so in this particular instance and more broadly every day. And finally, there's been much made about this question of intelligence and imminence. I answered it multiple times on Sunday. I'm happy to walk through it again. Anytime a president makes a decision of this magnitude, there are multiple pieces of information that come before us. We presented that to him in all its broad detail. We gave him all the best information that came not only from the intelligence community, but for those of us who have teams in the field. We evaluated the relevant risks and the opportunity that we thought might present itself at some point. And we could see clearly that not only had Soleimani done all of the things that we have recounted, right? Hundreds of thousands, a massacre in Syria, enormous destruction of countries like Lebanon and Iraq, where they've denied them sovereignty, and the Iranians have really denied people in those two countries what it is they want, right? Sovereignty, independence, and freedom. This is all Soleimani's handiwork. And then we'd watch as he was continuing the terror campaign in the region. We know what happened at the end of last year in December, ultimately leading to the death of an American. So if you're looking for imminence, you needn't look no further than the days that led up to the strike that was taken against Soleimani. And then you, in addition to that, have what we could clearly see were continuing efforts on behalf of this terrorist to build out a network of campaign activities that were going to lead potentially to the death of many more Americans. It's the right decision. We got it right. The Department of Defense did excellent work, and the president had a entirely legal, appropriate, and a basis, as well as a decision that fit perfectly within our strategy and how to counter the threat of malign activity from Iran more broadly.
Kira? Mr. Secretary.
Yes, ma'am.
Two questions, if you don't mind. Iran's Foreign Affairs Minister Zarif granted an interview saying that Soleimani was on a diplomatic visit to Iraq, that the U.S. strike to take him out was state terrorism, that President Trump has prepared to commit war crimes, and that Iranians are enraged. First, that's the first question. I'd like your reaction to that. Second question. President Trump has indicated that Iran's cultural sites could be targeted. Is that true? Are they on the target list? And if so, do you consider that a war crime?
So, let's see. So, Zarif's statement. His first statement that Soleimani was traveling to Baghdad on a diplomatic mission. Anybody here believe that? Is there any history that would indicate that it was remotely possible that this kind gentleman, this diplomat of great order, Qasem Soleimani, had traveled to Baghdad for the idea of conducting a peace mission? I made you reporters laugh this morning. That's fantastic. We know that wasn't true. We not only know the history, we know in that moment that was not true. Zarif is a propagandist of the first order, and most of what you suggested in his text message or email or message that you laid out there was indeed Iranian propaganda. It's not new. We've heard these same lies before. It's fundamentally false. He was not there on a diplomatic mission trying to resolve a problem. I know there's been some story that he was there representing a Saudi peace deal. I've spoken to my Saudi counterparts at great length. I'll leave to them what the contents of their messages may be, but I can assure you that they will share my view that he was not there representing some kind of agreement that was going to reduce risk or reduce the risk to the lives of Americans when he was on that trip. Your last piece was about cultural sites. I said on Sunday, I will reiterate it again. Every target that's being reviewed, every effort that's being made will always be conducted inside the international laws of war. I've seen it. I've worked on this project, and I'm very confident of that.
David Brenton?
Thank you. Mr. Secretary, it's an election year, and you're now facing two nuclear-related crises with Iran and North Korea. Are you optimistic about resolving either of those without them sort of blowing up, so to speak, at inopportune moments? And on the Iran front, Iran's breakout time when you came into office was considered to be about a year. Is it now longer or shorter?
I'll leave it to the intelligence team to talk to you about the details of Iran's breakout time for the moment. But President Trump could not be more clear. On our watch, Iran will not get a nuclear weapon. And as we came into office, Iran was on a pathway that had been provided by the nuclear deal, which clearly gave them the opportunity to have those nuclear weapons. We won't let that happen. As for the first question, which was more broadly, what President Trump laid out in his national security strategy with respect to both North Korea and Iran is the plan that we have executed, the strategy that we have executed for this past 3 years. We have put Iran in a place that it has never been before, where they've had to make some very difficult choices about how to pay for and underwrite their proxy militias around the region, whether and how to build out their missile program. This is a flip from where we were 8 years before. It's not political. Previous administration made a different choice. They chose to underwrite and appease. We have chosen to confront and contain. Those are different strategies. We believe ours is successful, and we ultimately believe it will be successful at making Iran behave like a normal nation. We'll deny them the capacity to build out their nuclear program, and threaten not only Americans and our lives, to keep Americans safe, which is our mission set, but also to create enhanced stability throughout the Middle East. We're confident that that's the case. North Korea, which you asked about, we still are hopeful that we will be able to head down a path. I was here with you all in December sometime when there was lots of talk about what might happen at the end of the year. We've not seen that yet. We still remain engaged and hopeful that we can have a conversation about how to get the denuclearization that Chairman Kim promised to President Trump back in 2018. Take one more.
Okay, James.
Thank you very much, Mr. Secretary. Two quick things here on the Soleimani strike. Since the Trump administration withdrew the United States from the Iran nuclear deal, about 2 years ago or so, the Trump administration has said repeatedly that it is pursuing against Iran a maximum pressure campaign. First question, the Soleimani operation, was that part of the maximum pressure campaign?
Do you have a second one?
Yeah, we'll come back to it.
If you just ask them both, then I'll tackle them both.
To your knowledge, was any legal counsel in the executive branch consulted for his or her input surrounding the legal aspects of the strike prior to its execution?
I'll leave to others to comment on that, but I can say as a pattern and practice, I have never seen this administration engage in an activity of this nature without a thorough and complete legal review of what the basis would be if the president were to make a series of decisions. Often the lawyers review all of the options that are being presented to the President of the United States in advance of them being presented, such that every option that is presented to him has been fully vetted through the legal process. I'm confident that that was the case here, although I don't have specific knowledge of that. I'm confident that that was the case. Second, you asked about the scope of the strategy and the maximum pressure campaign that we've had in place. It has a diplomatic component, it has had an economic component, and it has had a military component. And what you have seen over the course of these past May 2018, when we withdrew from the Iran nuclear deal, you've seen us execute that with enormous vigor and energy. You've seen it diplomatically. We've built out coalitions around the region with the Israelis, with the Gulf states, on certain files, on the missile file and on the terror file with our European partners as well, not just the E3. Go back and look from May of last year. Go look at the statement that was made in Warsaw, a united statement centering the instability in the Middle East on the Islamic Republic of Iran. We've got a coalition now in the Straits of Hormuz. We've diplomatically isolated the Iranian regime. Second, economically, we've all seen the sanctions put in place. It's now over some 1,000 sanctions. We've watched the regime struggle to figure out how it was they were going to make it through 2020. They've got a budget that will fall short by a significant amount in 2020 as a direct result of the pressure that we've put on the regime. And then you saw over not just this past week, but over the last year, you've seen our security component to this. You've seen us reinforce allies in the region by ensuring that the Emirates and the Saudis and all of the others were prepared for what might happen if Iran decided to make choices that were bad for the Iranian people. And then you saw more tactically, just these last few days, the president's response when the Iranians made a bad decision to kill an American. We hope they won't make another bad decision just like that one.
Clear. The Soleimani strike was part of the administration's maximum pressure campaign, and going forward, the Iranians should understand as they develop their calculus that similar actions, such as the Soleimani strike, could well continue to be a feature of this maximum pressure campaign.
I think the president's been unambiguous in his both the remarks he made down in Florida as well as the tweets that he's put out about the seriousness with which we take this, the risk attendant that we are deeply aware of, and the preparations we've made to prevent those risks, as well as our determination that in the event the Iranians make another bad choice, that the president will respond in a way that he did last week, which was decisive, serious, and messaged Iran about the constraints that we are going to place on that regime so that it doesn't continue to put American lives at risk. At the end, our Iran policy is about protecting and defending the homeland and securing American lives. I know that the efforts that we have taken, not only last week with the strike against Soleimani, but the strategy that we've employed has saved American lives. I'm highly confident in that. Take one more. Yeah. Andrea, yes, ma'am. How are you?
Thank you very much. A question about the issue of cultural sites, because the president said on Air Force One coming back, after you had been on the Sunday talk shows, that They're allowed to kill our people. They're allowed to torture and maim our people. They're allowed to use roadside bombs and blow up our people, and we are not allowed to touch their cultural sites. It doesn't work that way. Defense Secretary Esper has made it clear that he would not follow an order to hit a cultural site would be a war crime. I'm wondering whether you would also push back in your advice or in your role.
You're not really wondering, Andrea. You're not really wondering. I was unambiguous on Sunday. It is completely consistent with what the president has said. We will take every action we take will be consistent with the international rule of law, and the American people can rest assured that that's the case. Let me tell you who's done damage to the Persian culture. It's not the United States of America. It's the Ayatollah. If you want to look at who has denied religious freedom, if you want to know who has denied, the Persian culture is rich and steeped in history and intellect, and they've denied the capacity for that culture to continue. If you go back and look at the holidays around Cyrus and Nowruz, they've not permitted people to celebrate. They've not allowed people that they've killed, that Qasem Soleimani killed, they've not allowed them to go mourn their family members. The real risk to Persian culture does not come from the United States of America. That there is no mistake about that. Thank you all. Everybody have a good day.
We've been listening to U.S. Secretary of State Michael Pompeo at a press conference talking about a wide range of issues, from China's treatment of Islamic members of its community to what's been going on in Iran, and really everyone trying to figure out what the U.S. strategy is in response to any potential retaliation from the Iranian government. Joining us now is David Wehner of Bloomberg News. David, what was the biggest takeaway that you got from this press conference?
Yeah, I think exactly that. He's responding to this sort of lingering question that many people have. What is the U.S. strategy in the Middle East? What is the U.S. strategy in Iran specifically? And I think what he's trying to say is this is tethered to a strategy. This is part of business as usual for us. We have a strategy in Iran, which is a maximum pressure campaign to put, maximum pressure economically on Iran with sanctions to respond to any threats that they have against U.S. troops or U.S. assets. And that's what we did when we took out Soleimani. So I think he's sort of trying to really show that there is this sort of holistic approach.
Interesting, David. Is there any sense within Washington, D.C., the extent to which this administration will go, if there is, in fact, a next step, a retaliatory step for the U.S., if, in fact, Iran does retaliate?
Yeah, I think we're hearing a lot of different, signals here, and that's definitely sort of the billion-dollar question here. What would the U.S. do if Iran took action? Iran is carefully signaling and making it very clear that they plan to retaliate, but within some sort of confines of what they call international rules, right? So we'll have to see, but I don't think we have a clear signal of what the U.S. would do.
David Wehner, stick with us. We want to bring into the conversation Ariel Cohen. He's Senior Fellow at the Atlantic Council and founding principal of International Market Analysis. Ariel, can you give us a sense of whether we are getting a clear picture of what the U.S. has planned and how far it is willing to go in response to any retaliatory measures taken by the Iranian government?
Well, I think Mr. Trump is articulating a very strong stance, probably went too far referring to cultural sites, as we witnessed at this press conference and from the statements of many American politicians, experts, etc. People are very uncomfortable with us committing any kind of war crimes, and justifiably so. We shouldn't. But in terms of Mr. Trump being Mr. Trump and messing with Iranians' heads, I think he probably did it not being fully cognizant of what he's getting into. In terms of the actual fight, Iran is no match to the United States conventionally, and of course not unconventionally. They don't have nuclear weapons as far as we know. But in terms of this indirect warfare that they excel in, terrorist attacks, subversion, weaponizing Shia minorities throughout the Middle East, the creation of the so-called Iranian crescent from the Mediterranean to the holy city of Qom in Iran. They're doing all that. They are now less one quarterback, and that was Mr. Soleimani, General Soleimani. He was not a regular military. He was a paramilitary leader who was engaged deeply for decades in terrorist activities, and in that respect, his elimination was justified.
So, Ariel, wanted to get your thoughts on this. Secretary Pompeo said that Iran's nuclear program is more diminished than it was under the JCPOA deal that President Trump pulled out of. Is that, in fact, the case from your understanding?
I'm not sure. And these things are very technical, and you need a lot of classified information to really analyze it. If Mr. Pompeo, who has better access to classified information than I do, says so, it would be a challenge to all of us to prove him wrong.